Hello, ladies and gentlemen, and welcome to Fintech Week Lithuania, a global virtual conference of 4 days. It's a little unfortunate that it's a virtual conference because I would rather enjoy saying hello to 3,000 people sitting in front of me, but that's the world that we live in today. COVID-19 slightly led the digitalization of the events industry, and I would like to commend our organizers of the event. Ladies and gentlemen, the event is organized by Ministry of the Economy and Innovation, the Ministry of Finance, Agency for Science, Innovation and Technology, Rocket, Fintech associations like Fintech Lithuania and Fintech Hub LT. My name is Aurimas, and I will be your best friend for the upcoming 4 days. We're going to spend a lot of time together, and I'm sure it's going to be the most fun time we can have. So, ladies and gentlemen, it is awesome for me to say that, as I already mentioned, 3,000 people are connecting to us live and live streaming the conference. So we're going to have over 70 speakers from different countries, from Europe, North America, and Asia. Most famous speakers, commentators, unicorn leaders that are going to expose some details about stuff that happened that you may not be aware of yet. It's going to be awesome. I promise you that. We're going to have a really good time. And ladies and gentlemen, without any further ado, allow me to introduce the congratulatory speech of the Minister of Finance of the Republic of Lithuania, Vilius Šapoka.
Dear FinTech friends, it's my great honor and great pleasure to welcome you to this global event, Global FinTech Week, an event full of inspirations, new ideas provided by the top experts in the world, in the field. Warmly welcome to virtual home of FinTech. Pandemic has severely hit people, many businesses, and most of economies. However, for some sectors, it also opened opportunities. Without doubt, social distancing put a spotlight on digital services. We can see that the behavior of consumers is changing. Fintechs can certainly benefit in the current circumstances. Increasing number of transactions in such a short period of time has been a great test for fintech companies, and the outcome is very positive. Financial technologies are able to offer various kinds of services, from P2P lending platforms to digital banks to lending to consumers, and of course, fintechs may able to help to serve customers that are usually excluded by the traditional service providers. This means that now it's a great time to expand further, keep the momentum and leverage on recent positive experience, and provide value for money for the benefit of customers who need better money management, access to credit, digital identity services, quick fund transfers, and many others. We're very happy to host FinTech Week, where topics such as FinTech's future after COVID-19, artificial intelligence, data protection, capital markets, digital euro, anti-money laundering, cybersecurity, and many, many others. Let me thank my colleagues from the Ministry of Finance and our partners, Ministry of Economy and Innovation, Agency for Science, Innovation and Technology, Invest Lithuania, Rocket, Fintech Lithuania, Fintech Hub LT, and all others for organizing this event. Pandemic added speed for fintechs, so fasten your seatbelts and enjoy the journey.
Thank you very much for the Minister of Finance. It is an inspiring speech. As you know, after COVID, we are actually in very good spirits and we're rocking along. It's going to be awesome. Ladies and gentlemen, allow me to introduce our next speaker, Minister of the Economy and Innovation, Žygimantas Vaičiūnas.
Dear fintech leaders, entrepreneurs, and financial investors, I'm glad to be here and to welcome you here while launching the Fintech Week Lithuania. This is really because technologies are delivering the most, which is important for all of us and for our societies. You, the fintech community, are full of countless stories of incredible vision, groundbreaking innovation, and tireless hard work. I want to tell you one startup story. For the time being, let's call it a hub. In the 19th, during the time of Soviet Union, the team in operation decided to break the wall. They lost everything, but worked hard to have a new from scratch. They created new processes to adapt the new environment, where the currencies changed a few times, where economic and political crises were a new norm. During this time, Hub taught a lot about money transfer systems and how to make everything cheaper and more efficient. Innovation was at their heart. They worked hard, and after 30 years of innovation, a small startup became one of the world-leading fintech player, superb unicorn. The name of this hub is Lithuania. Today, international Lithuania is known as the country who has a strong base for the fintech to grow. The reason I'm sharing this story isn't just because it deserves enormous respect or recognition. It's because it is a story that exemplifies Lithuania's fintech experience, and a story that is being repeated over and over again across the Lithuanian fintech industry. You heard the numbers. We doubled the number of fintech companies just in a few years. But we shouldn't be perky. I think that Lithuania has some right to lead the world of fintech. You need the right support from government to succeed. You need the best investment environment, the right tax system, the appropriate regulatory rules, and the best infrastructure. As a minister, I'm very proud that we have all ingredients we need to be successful. First, we have a pro-innovative regulator. The Bank of Lithuania is the original fintech unicorn. We have introduced new rules, and I'm delighted to see our Bank of Lithuania and its regulatory sandbox. This allows firms to test and refine their products with consumers in a safe environment. We have a blockchain sandbox. And I know it's a great idea because multiple other countries around the world have already copied it. Lithuania remains the leader in continental Europe in terms of licensed fintech companies. The interest is still not fading. The Bank of Lithuania currently is reviewing almost 50 applications. We have talents. This is the second and very important element. Our world-class universities, together with the fintech leaders, developed programs which are powering today's digital revolution. Third, we have all right backing from the government. What we can do, and I can do, is to create the best environment in which this financial innovation can flourish. Every year, we prepare a strategic plan with KPIs for all the institutions. We are backing you and the whole economy with the digital infrastructure. We have been working for 4 forces of change: political, economic, social, and technological. All of that makes Lithuania a fintech-friendly spot. My message today is simple. We stand at the dawn in the new era in banking. And my message to everyone who is listening is that let's build the fintech companies of the future and for the future. Let's create the history of the global hub. Our doors will always be open to the innovations and investors, and we will keep working to support you. With our country's incredible history and experience, we are ready to help others to grow, ready to share our knowledge, and still willing to innovate and learn, as the very nature of this industry means that it moves incredibly quickly and fiercely competitive. So the technologies and regulations discussed during this event will revolutionize the way we bank, the way we invest, the way companies raise money. It will lead to new products, new services, and new lenders. I wish you all the excellent and exciting presentations, discussions, which will lead to these new products. We are giving you the banking all you need. Focus to win, learn, and explore. Now, let's get on. Thank you.
Thank you, Minister. It was a pleasure listening to you because it brought back a little bit of good memories. As a matter of fact, the Minister is right in saying that we are extremely experienced in changing currencies, right? When I think for a bit, I remember, so we we exited the Soviet Union and had the Russian ruble. Then we moved on to a temporary currency, then adopted the litas, then moved on to the euro. And now probably what the future holds after this week, who knows, maybe we'll make a decision to move on to a digital currency that everybody in Europe can use. So, ladies and gentlemen, it is a pleasure having such esteemed guests here on stage, congratulating us with the start of the event. And I will correct myself slightly because I devalued the amount of speakers we're going to have. As a matter of fact, I said 70. That's not true. Make it double. It's almost 120 people that are going to present on this stage or online. So it's going to be quite a few of interesting conversations, panel discussions, keynote speeches, and so on. So right now, I think we need to move on to some technical details. I'm pretty sure that people viewing us online can figure a lot of the stuff out themselves because it's very intuitive and easy. But just for everyone to be on the same page, I'll give you a little bit of details on what we are planning to do and how we're doing it, right? So the website www.fintechweek.lt is open for registered participants on the OnVent platform. However, live broadcasting is also available on YouTube and Facebook, and also the OnVent platform that I've just mentioned right now. For those of you, ladies and gentlemen, who access the webpage www.fintechweek.lt, you will be greeted in the participants hall, where you can either visit the expo and communicate directly with the expo participants. There are 50 stands available for you to review. You can also discuss and chat with other conference participants via chat or video calls. You can also create discussion groups and enter the door to the auditorium, where you'll be greeted by probably my face and the live broadcasts in the conference hall. You can follow the discussions here, ask questions directly to the conference speakers on the chat wall. It is important to note that you will only be able to ask questions directly during the broadcast. As soon as the next panel starts, the questions from the previous panel will disappear from the screen. There would be two options for that the questions would be answered. It's either in the written form by the speakers during the broadcast, or addressed directly by the moderator to the participant. In the reception, you can also ask questions. If you have any doubts, address them in the info desk girls. In the reception, the live wall, where we will invite you to introduce yourselves, discuss, comment, and share your messages that will be visible during the entire conference. In addition to that, make sure you follow the instructions on your screen. It's actually very easy and very intuitive to use the platform, so I'm sure you're not going to get lost. If you are connecting via your phone, unfortunately, we're going to have to ask you to connect via a PC or a laptop of any other sort. as the system is not currently adapted for mobile streaming. All records for a given day will be posted during the next day, so if you missed something, we realize that sometimes it just has to be that way, right? You have to run to a meeting, but it's an interesting presentation or a keynote that you wanted to listen to. The recordings will be available on the next day. And I would like to remind you again, the news are available on social media, so you can keep them, share them, and do as you please. So it's awesome. And right now, I'm super excited because, ladies and gentlemen, I have actually our first presenter to give his address to all of you. JD Peteris Zilgalvis. He is the head of Unit Innovation and Blockchain at DG Connect. And his presentation is going to be Fintech, Blockchain, Innovation, Infrastructure, and Regulation. The gentleman, Peteris Zilgalvis, is a very esteemed figure, so I would like to share a little bit of a bio. Peteris Zilgalvis, as I've already mentioned, is the head of Unit for Digital Innovation and Blockchain in the Digital Single Market Directorate at DG Connect, and is the co-chair of the European Commission Fintech Task Force. He was the visiting EU Fellow at St. Anthony's College at Oxford University between 2013 and 14, where he was an associate of the Political Economy of Financial Markets program. From 1997 to 2005, he was the deputy head of the Bioethics Department of the Council of Europe in his Directorate General of Legal Affairs. In addition to that, Peteris has held various positions in the Latvian Civil Service, Ministry of Foreign Affairs, Ministry of Environment. He was a senior environmental law advisor to the World Bank Russian Federation Environmental Management Project and was regional environmental specialist for the Baltic countries in the World Bank. He has been a member of the California State Bar since 1991, completed his JD at the University of Southern California, his BA in Political Science cum laude at UCLA. The High Potentials Leadership Program at Harvard Business School is also among his credentials. A recent publication of his is The Need for an Innovation Principle in Regulatory Impact Assessment, the Case of Finance and Innovation in Europe, in Policy and Internet. An upcoming publication is The Law and Political Economy of Decentralized Digital Ecosystems. Ladies and gentlemen, it is my pleasure to give to you our first speaker of today, Peteris Zilgalvis.
Good morning, everyone. Good morning, Ministers Shapoka and Vichunas. Thank you very much for inviting me. I'm honored to be in your great event of Lithuania Fintech Week and to be talking to 3,000 plus listeners from this esteemed event. My only regret is that I can't be in beautiful Vilnius, Lithuania, one of my favorite cities of the EU. As was announced, I'm head of Unit for Digital Innovation and Blockchain, and also co-chair of the Fintech Task Force of the European Commission, which brings together services of the entire Commission to work on tasks like the Fintech Action Plan and also the upcoming Digital Financial Services Plan, working obviously together with the colleagues from DG FISMA for financial services, but I'm coming in from the digital single market side, adding the cybersecurity, the EID, the blockchain, the standards, the other aspects. So my presentation today is Fintech, Blockchain, Innovation, Infrastructure, and Regulation. We both work on specific technologies. I'll also talk about artificial intelligence, as well as Fintech across the board, as well as the whole digital economy and society. My first slide is on the strategy, a joined-up strategy of the political commitment of all 29 countries in the EU blockchain partnership. Let me see this, though. That's where we are exactly. And a public-private partnership of INATBA, the International Association of Trusted Blockchain Applications. Also, we're connecting the knowledge to the action. The EU Blockchain Observatory and Forum, in which Lithuania and all the other member states participated during the first mandate, is now rolling into its second mandate with a renewed team. This is something that was foreseen in the public procurement. It's a think tank working for us. Workshops on issues such as blockchain and the financial services, blockchain and innovation, blockchain and the general data protection regulation. The workshops are open to everyone. We have videos that have been recorded from previous workshops. We have reports, deep dives, also a mapping. We would be glad to see your projects from Lithuania, from other countries of the European Union and the world. So please take a look at that website and participate. We'll have a final book coming out from the first 2 years of the mandate, and then we'll be rolling over into our next workshops, which will include issues such as central bank digital currencies, digital assets, for instance. We're also investing in the technologies and in the ecosystem, both in research and in deployment. I'll say some more about that. We're also promoting a legal framework, a pro-innovation legal framework in the digital single market, skills and standards. Again, I'll say a few more words about that. And then we have an AI blockchain investment fund investing in startups, early and growth stages. It's about euro 100 million, financing a portfolio, scaling up the volume of investments, incentivizing further private sector investments. We want to get together with the national development banks and work together with them. And also there'll be future support coming in, under the Invest EU program. We started with 100 million euro this year, going up to at least 400 million euro. Next, if we look at the big picture, convergence, the data economy, here we see that we had the adoption of a data strategy, a white paper on artificial intelligence, a digital strategy in February 2020. This digital strategy included an initiative on digital finance and an initiative on digital assets. We had the public consultation earlier this year. I'll say some words about that. Very good response, very interesting and useful evidence for us, and we'll be moving forward with this legislative instrument. As befits something coming out of the Fintech task force, my colleagues in DG FISMA in the financial services will be looking at the application of regulation like MiFID, the financial markets in general, e-money to payments. What about the stable coins as well? And then on the side, that there's the non-financial instrument tokens, the ones that can be running decentralized systems, perhaps running smart contracts outside of the financial services. Then we're lending our hand from the digital single market side to make sure that there's a pro-innovation framework, as well as for the potential of tokenization outside of the strictly financial services areas. And then very interesting synergies are coming up for next generation manufacturing, for instance, or for on-the-move charging for electric cars, etc., where we can utilize micropayments possibilities of these branches of fintech. There's also a white paper on artificial intelligence, which was adopted. AI obviously has a lot of potential in the areas of financial services and fintech, producing products tailored to customers, also managing risk better, foreseeing possible changes in the financial and societal and economic landscape. A blockchain strategy, which is probably now going to be part of a bigger strategy on technological sovereignty, along with data, along with quantum computing, the modern and essential technologies for Europe's competitiveness. And then we will aim to have probably a longer publication on blockchain as well, explaining the state of play, both both technically and in the legal framework. A standard strategy, not at all confined to fintech, but across all digital technologies, and also looking at the synergies between areas like 5G, 6G, quantum, artificial intelligence, fintech, and blockchain. Now I'll proceed on the European Blockchain Partnership. I mentioned 29 countries, all 27 EU member states. You see the ministers here. Lithuania has been a signatory since the beginning, an active member, along with the other Baltic countries, and as I said, all member states, Norway and Liechtenstein, so a very impressive group working together on a European blockchain services infrastructure, which is a first in the world. We're going to be delivering, and as early as this year with the first services, public services utilizing blockchain to EU citizens. And this is, of course, where it's justified. It's good to always underline that we're not carried away about the hype. Blockchain isn't the solution for everything, but it is, we think, a great tool and an efficient tool for multi-level governance, for collaboration between different parties who either can't or don't want to share a database and want to record transactions, timestamp transactions, and have recording of this. So we have areas like regulatory reporting in the areas of tax, different areas of tax, and we have also use cases on self-sovereign identity, diploma certification, and audit document certification. We'll be moving into a whole new set of use cases, one of which was announced already in the small and medium enterprise strategy, which was adopted on the 10th of March, and that is of small and medium enterprise bonds that could be issued across the whole digital single market utilizing blockchain technologies. This is something that is an important moment in the recovery plan of the EU coming out of the coronavirus crisis, where we're still in, but obviously we are looking ahead along with all the member states in the ways that we can recover our economy and make it more resilient in the future. I mean, which I didn't go into detail. We're also looking at the utilization of blockchain for health. I mentioned blockchain for e-government, blockchain both providing cybersecurity and blockchain being cyber secure. Next, I talked about the EU Blockchain Observatory and Forum. This is a long slide, which I'm happy to disseminate, so I won't read it all. But you see the richness of the different reports there, and it's good to underline. I mean, there's a consortium working in the Observatory and Forum, and the Commission obviously works on it, as well as it being a think tank working for us. But this is these are achievements of also experts from the member states, the community, the ecosystem. And that's something I also want to underline, that linking all of these initiatives is an ecosystem approach. These are the European companies, both corporates and startups. These are the European users of blockchain technologies, member state governments, municipal governments, regional governments, technologies, and other parts of the economy. The European Commission, obviously, we hopefully are playing a good role here. And we want to have this ecosystem to be a very strong one that is recognized globally, which I think we are with the European blockchain services infrastructure on the public sector side. But the next step as well, after the use cases that I mentioned that are public sector, is that the declaration on the European Blockchain Partnership at the, very, I think, positive insistence of some of the member states foresees having a public-private or public-private partnerships. These could be coming forward in the upcoming years. They should be proposed by private sector actors along with member states. So, I mean, if you have great ideas coming from Lithuania, other Baltic countries, obviously any other member states, we need to put it to the European Blockchain Partnership, and and then we can see which possible use cases could be approved. And then this is moving it further, again, strengthening the ecosystem, using the public sector investment as a basis for making Europe's ecosystem in blockchain and fintech one of the strongest in the world. Here we're a little bit inspired from the history of the early internet with the ARPANET and NSFNet and so on being a part of the beginning of the very strong digital economy emanating from Silicon Valley and other places in the United States as well as other places in the world. And this time with the next generation internet, where we think fintech and blockchain will be strong components, we would very much like to see a center of gravity, if not the center of gravity, to be in Europe. Moving into a legal study that we had, we were looking at smart contracts, their recognition across borders, issues of fragmentation across borders. And here it's obviously something that we would like to prevent. We want the digital single market to be working for everyone. An entrepreneur from Kaunas or Vilnius, as well as from Rome or from Amsterdam, should be able to offer his or her service, digital service, everywhere in the EU. So this is a set of questions that we have right now in the Digital Services Act public consultation. I'll talk about the Digital Assets public consultation in a moment, but the Digital Services Act public consultation is open right now. Lots of very vital questions about platforms, about e-commerce, and a set of questions for, let's say, our fintech and blockchain community specifically on smart contracts. So I really encourage you to answer those. Then on tokenization, the study asked, is the current legal framework appropriate for issuing and trading tokens, i.e. crypto assets, specifically when they're not considered financial instruments? Because as I mentioned, we have a division of labor, obviously giving our opinions and receiving opinions with our colleagues in financial services and also the single market DG Grow. But we're trying to make a contribution to make sure that decentralized digital systems, decentralized digital ecosystems can benefit from the tool of tokenization. The basis for this legal study, as well as the legal study itself, which is public now, is also the work of the EU Blockchain Observatory and Forum, the opinions of the European Banking Authority, of the European Securities Markets Surveillance Securities and Markets Authority, and the study that I just mentioned. Moving further, we have the public consultation on the digital assets, on the crypto assets. This is a very rich slide, which I'm happy is made available to all listeners and the conference. Here we talk about a little bit the large number of submissions we received from all different groups of stakeholders that we're looking how to determine how the existing legislation or possibly needed future legislation could be applied to the digital assets. And again, you have to understand, and this is in the public statements of our Vice President Valdis Dombrovskis, that the attitude of the European Commission is a very positive one. There may be some hesitation about, let's say, the size of one or two global stablecoin offerings, which might require, for various reasons, increased scrutiny related to financial stability and their influence on the financial system. But in general, the attitude towards the tokenization, the use of digital assets, is a very positive one, and one that we really want Europe to be a place where the innovation is taking off in this area. So that's something that will be coming up. There was a lot of interest in more legal clarity being provided. So while the decision as always in the European Commission, is taken at the political level, whether we will legislate, so these are our commissioners, the politicians, the civil service is moving forward with preparing a possible legal instrument, which you can see in the third quarter of this year, so the beginning of the autumn. Moving Moving on to standardization, which I mentioned, is something else my unit is responsible for. And the standards are, these are all digital standards. So it's things related to fintech, but the way that the internet works in general, the way that the next generation internet will work, so including the blockchain as well as data. We think that standards give an advantage to small and medium enterprises, allowing them to build innovations on top of standards, but also lowering barriers to entry. Obviously, if you have a big proprietary technology that is closed, or if standards are changing all the time and in non-informal standards, it's a lack of stability in the marketplace. So while not locking in the market, and you have to always understand that standards are voluntary unless they've been included in a piece of legislation, which is not usual, it's an opportunity to be able to adapt your offer to the standard, also to public procurement, so to avoid as well lock into public procurement that, okay, only this company can offer what we're asking because we've gotten used to using their paradigm. So that was what we were doing on standards. We have an upcoming workshop that I can advertise on the 17th of June at the European Commission, which is on blockchain standardization specifically. It's open to register, so anyone who's interested in blockchain standardization and what's happening in ISO Technical Committee 307 and ETSI and Senelec, a little bit, this alphabet soup of the standardization organizations, you can find out more about that, whether you're a standardization expert or just want to hear more about what's happening in that area. So thank you very much for your attention. Here you see my email. You see the Twitter handle of the EU Blockchain Observatory and Forum, and you see my own personal Twitter handle. I think this is going to be, as always, a great FinTech week in Lithuania. Sorry only that we're not enjoying the amazing old town and restaurants and pubs and live interaction in Vilnius, but I'm sure we'll be back again soon. And I, among others, I think will be listening with great interest to the speakers to come. Thank you again for this invitation, and thank you for your attention. Bye.
Thank you to Petris Ilgalvis for a very enlightening presentation. I'm sure you've had your chance to ask the questions, and also Petris would have had the opportunity to answer them as well. And right now, I am very delighted because I have a studio guest with me here, a live person rather than an online presentation. That is going to be a very interesting conversation we're going to have. With me here, I have Vytautas Karalevičius, co-founder of Bankera. After graduating in finance at Durham University and finance at Cambridge University, Vytautas co-founded SpectroCoin, an all-in-one solution for cryptocurrencies which currently has over 1 million registered users. Operating in the digital sphere for a number of years, Vytautas and his partners have observed that payment solutions offered for new types of online businesses are very limited. To counter this problem, he decided to start Bankera, a bank account alternative for digital businesses, which has launched in early 2020. As an entrepreneur, Vytautas seeks to help people and SMEs to deal with digital payments, since the economic activity is clearly moving online. He aims to address the financial needs arising from this shift by developing frictionless, cutting-edge solutions. So, ladies and gentlemen, I have Vytautas with me here, who joined me. And first of all, I need to say that the most recent development that Vytautas is known for right now is the EU versus virus hackathon. This has created a 2,164 multidisciplinary, multinational teams with innovative solutions throughout April, then sparked the development of 2,235 new cross-European partnerships by matching the best 120 teams with 500 plus supportive partners from the public and private sectors. So, Vytautai, it's really good to have you. Thank you very much for coming. Fist bump, proper saying hello nowadays. So, first of all, I'm very keen to hear a little bit more about the solution that you created during the EU versus virus hackathon. How did you come up with it, and how much time did your team dedicate or invest into the initiative?
Yes, so the idea actually to develop the business SME loans with a collateral from the supplier came up with the idea actually by looking at the situation which was at the beginning, at the middle of the lockdown due to COVID pandemic, when we saw that the SMEs who actually had a loan, they actually received some support from the governments or from the financial institutions when their loan payments were postponed or their loans were subsidized or additional capital was given from the government to prolong the loans. While on the other hand, we saw the problem that is actually a bit on inequality, because there are a lot of SMEs who have never ever taken a loan, and they are extremely unleveraged, and they're extremely, let's say, kind of financially strong. But due to the lockdown, they actually need additional capital, and they were not able to foresee it because all the traditional financial institutions, such as banks, were perceiving the market as more dangerous. So when we saw that more or less the business opportunity, that actually you can provide the loans to the SMEs who faced this force majeure, the lockdown, but who actually are financially strong, because they don't have like a outstanding debt, and all their business model in the normal terms is okay, is good. Just they need probably to do either a transformation or just to wait over for the lockdown to be solved. On the other hand, we took into consideration the fact that the cash flow is actually what can kill the business, not the loss or so on. And the lack of cash flow actually can spin off over all the economy and over all the supply chain to actually have a tremendous effect on the economy. So we saw an opportunity to build a lending product, which is more or less traditional loan product. Just we want to take the both parties of the exact transaction, so the supplier and the buyer, and we want to have them both on board by giving the guarantee for their counterparty, as well for giving more information about transactions. So we would be able to minimize the information asymmetry and actually to make a well-informed loan by having the collateral from both parties. Because how we look in this case is that if supplier wants the buyers to survive, they would be even giving the cash advances or just postponing their trade payables for foreseeable future if they would have sufficient capital. But the problem for suppliers is as well is the lack of liquidity, because we also have our own suppliers, they have employees and so on, they have a need to pay them, but we probably are willing to take that risk. So that's why we saw this initiative from both sides, and we try to create a financial product, then we lend to the small businesses by taking additional guarantee collateral from the supplier.
So effectively, we're saying that this solution is about the survivability of a small or medium enterprise. Is that a correct kind of assumption that I'm making here?
Yes, exactly, but it's also to stop the spin-off over all the supply chain, because if let's say, end retailers, they go out of business, it will spin off to the suppliers, to the employees of suppliers, and furthermore to the economy.
Well, we don't want to make this as a kind of domino effect, right? Because the impact, if the small medium enterprise collapses, the suppliers will get a hit on that as well.
Yes.
Perfect. The idea was created by Bankera. Is that
Yes.
a correct assumption,
Yes.
right? And can you tell us a little bit more about Bankera? What does the company do?
So Bankera is more or less a spin-off from our previous business or still existing business, SpectraCoin, because me and my co-founders, we started all our enterprises with a goal to become a bank. And then from our previous enterprise, SpectraCoin, we created the Bankera to move towards the traditional finance. And now Bankera is operating in the payments area. It provides the payment accounts and payment processing visibility. And the next logical step for us is actually to go to the lending business. And the hackathon actually provided us an ideal situation where we can actually speed up our entrance to the lending business by creating a new product and by actually focusing the team as well due to the hackathon. So more or less, the Bankera is a payment provider for the digital businesses, for the innovative businesses, which business models are not usually understood by the traditional banks. And from Bankera, we are building also additional solutions such as financing and lending solutions for these type of innovative SMEs.
So I'm sure you weren't creating your enterprise as a reaction to a crisis, right? Or anticipating a crisis. But if I'm hearing you correctly, you, to a certain extent, you've managed to actually emerge at the right place and at the right time. Is that correct?
Yes, because I think usually in the hackathon, there are companies who are actually they're like just teams who don't have like a company. They just have an idea and they're going to hackathon to make their idea better and like try to find the investors or so on. While for us, we took a different approach. We went to the hackathon because it was created not as a traditional startup hackathon, but more to find the solutions to fight the current crisis in the Europe. So we came already as a team as having a product which has the rails for the payments. And then we built the solution for the lending on top of that. And in general, like I look into the business as more or less kind of a Lego building bricks. When you actually preparing them over time to react to the changes in the market conditions or changes in the new opportunities or emergencies.
So you mentioned Lego building blocks, right? So if you have enough of them, you could literally build a bridge to another continent. So the question is, what about scaling to other continents? Do you see any opportunities there? Because I think we're facing the same crisis globally this time.
Like probably we are not seeing the scaling up with the lending product because I think the lending risk is very specific to the market. So you have to have a know-how about the market in which you're lending and about the borrower and etc. So therefore we are building our payment solution as very global and we open to the companies from all around the globe. While with lending business we want to manage the risk by actually focusing initially in our region market, when expanding to the Europe, but actually expanding to the markets which we can reach and where we can have a know-how advantage.
So baby steps, in other words, right?
Yes.
So it's been almost 2 months since the end of the EU versus virus hackathon. What about the further development of the solution? When do you plan to make it accessible to the SMEs?
So we are planning to be live in the beginning of July, latest by the end of July. So we actually have done extremely a lot after the hackathon. We did like a lot of on the legal part by making the contracts and developing the models for the risk evaluation. We also started the MVP of the technical solution on top of our infrastructure to manage and issue the loans. Also, we developed the products inside the house, and also now we're adding the required informational pages as well as the questionnaires on our website to start the applications for the loans.
So to an extent, you've already answered that question, but why do you think you've aimed your solution particularly to small, medium enterprises. What prompted you to choose this particular segment?
So one answer is because, especially in Lithuania and our region, the SMEs are underfunded. So from business side, there's an actual opportunity to issue the loans to them. On the other side, we are still not a huge bank or huge player in the financial markets. So we have, like, our capital is limited, and then we can diversify properly by issuing the medium-sized loans. So that's why we are selecting the lenders who are underserved, and also their capital requirements are smaller than, let's say, huge corporates, etc.
And I'm assuming that it's quite difficult to build something from scratch. You have to have, using the same metaphor, some Lego building blocks already in your pocket, right? To be able to kind of, build on top of something. But did you actually build everything from scratch, or use an existing infrastructure to found this?
So our competitive edge, and why we are different in the hackathon, because we already had like the accounts, we had the payment accounts, we had the AML procedures. So more or less it was about just adding the lending product, the lending process. So it was kind of building one more additional Lego brick on top of existing infrastructure to make this product live. Because to build from scratch would probably have taken us 2 years at least, while we had like more or less everything regarding the payment side, regarding the compliance side. So it was more or less about focusing on the lending side, which we didn't have before. But we already had like some, how to say, some beginning for that, because in our roadmap for the next 2-3 years, it was already in our minds to start issuing the loans, and especially to SMEs, because where we see the biggest potential and the biggest value added to the market.
And in terms of competitive advantages versus more traditional lending services, do you think what kind of gives you the competitive edge versus traditional banks, say, for example?
Like traditional banks, I think we have a bit more flexibility, because like the lending to the businesses is not so heavily regulated as lending to the physical people, persons, and as well because we are not a deposit-taking institution by now. We have much more flexibility about how we can allocate our loans, and we can have like we are more flexible in our portfolio choice. Of course, it has much more risks, but like sometimes our risks cannot be, we are quantitative risk, we are qualitative risk, we are not quantitative risk. So let's say if you look at the business model specifically by us as the business owners, when we can take that risk, while let's say if you are institutional bank, when we have like a very strict processes, some of the businesses who actually are good opportunities and who are actually strong to pay back the loan would probably will never be financed, just because we will not be the profit fit for the bank's lending portfolio.
So how quickly could, for example, as a small business owner, could I apply for a loan? And if everything is right, all the procedures have been followed, how long would it take me as a business owner to actually start using your services?
Initially, we think to issue the loan within 1 week. But it also depends from case to case. It depends how quickly you will provide us with the required information, and how quickly we will be able to collect another information, etc. So it also depends on the lender side.
How quickly can you move, right? Okay. So, and obviously the obvious question. So, what are the future plans for Bankera besides the payment services and SME dedicated loans?
So more or less, as I mentioned at the beginning of the interview, like for us, we started to build the financial business because we had the ambition, and we have ambition to build a bank. So like after building the loans portfolio, and after having the portfolio of electronic money from the payment business, we're going to merge them and then apply to the banking license and to actually establish a one more Lithuanian bank.
So we will be seeing more competition in the banking industry fairly soon, I hope.
Yes, for sure.
Okay, that's very good. Ladies and gentlemen, I would like to encourage those online to also post their questions to Vytautas, as we will be happy to try and have a crack at answering them. But before we go ahead, so what else could you share about any kind of collaborative stories or something to the extent about the actual hackathon? Was that your first hackathon, and how do you feel about winning it?
No, it wasn't our first hackathon. We have already participated in the hackathon organized by the Central Bank of Lithuania back in 2018 to create the digital collector coin. And we like the hackathons because it's a good team building exercise, because we take the people from the different departments who usually don't work on day-to-day basis together, because they'll say, for example, the people from IT, design, and law, and legal and law. And the hackathons are good examples to make a new teams and actually to people to know each other better. Also, it puts additional external deadline for our internal roadmap things we want to achieve. So it actually bootstraps as well that. And regarding the winning the hackathon, it was actually very pleasant to us. And I liked that idea, because this hackathon in different circumstances made the hackathon more viable, because it allowed the existing business to come up with the idea to build on top of their own infrastructure, not just like in every typical hackathon when just like people who have never known each other before that, they're coming up trying to just bring the idea. And this hackathon was completely different, because we aim to bring the solution in a couple of months, and just I think only existing teams and existing companies are able to do that.
So philosophically, at least, I'm hearing that this kind of forum or this kind of competition, right, if you like, is actually a very kind of positive, has a positive spin on it in terms of actually producing a result. Because my understanding was, when it's landed from the top to you, it's really difficult. But what I'm hearing from you right now is actually that this is a fairly effective way of implementing ideas. Is that a correct?
Yeah, I think it's an effective way to implement the ideas, and it's an effective way to find the collaboration between the existing businesses as well as the government.
And we have a question online, so that's very good. We're going to use the time. What do you think are the key challenges for fintechs in Lithuania right now?
Actually, I think because the market is very competitive nowadays, so I think the competition for the talent can be a bottleneck in the nearby future, especially for competition of the talent in such fields as the AML, because Lithuania is like the finance world in Lithuania is still very new, and we don't have like a talent pool from, let's say, the last 20, 30 years, and everyone, like all the talents are actually built in-house in the companies, and they're not easy to let them go. So that's why I think like the bottlenecks, especially in the compliance side, will be a challenge for Lithuanian fintechs.
So if you read between the lines, Vytautas has just encouraged AML professionals and other professionals in the fintech industry to come to Lithuania and join us here, because we have a very, so to speak, robust and dynamic environment here for fintechs. Is that
yes,
correct?
and as well, it's something you cannot outsource easily. As well, you have like the limitations such as the language, because you have to practice the law, you have to speak Lithuanian, and then like that's probably one of the
easier languages to learn.
For the fintechs.
Absolutely. Ladies and gentlemen, it has been an absolute pleasure to have Vytautas Karalevičius, co-founder of Bankera, with me today here live in the studio. It's a pleasure, Vytautai. Thank you very much for joining us. And right now, I'll segue on to something really, really cool, which I think each and every one of you has been anticipating very much. So our next speaker, keynote speaker, introduces himself as an author, commentator, and a troublemaker. But that would probably be unfair if I didn't spend a little bit more time to actually introduce him properly. Ladies and gentlemen, our next speaker is Chris Skinner. And Chris Skinner is known as one of the most influential people in technology. He's an independent commentator on the financial markets and fintechs through his blog, thefinancer.com, and author of best-selling books such as Digital Bank, Value Web, and Digital Human. He chairs the Financial Services Club and Nordic Future Innovate, and is a non-executive director of 11FS and serves on the advisory boards of various firms. Mr. Skinner has been an advisor to the United Nations, the White House, the World Bank, and the World Economic Forum, and is a visiting lecturer at Cambridge University, as well as a TEDx speaker. He is also a co-founder with renowned artist Basia Hamilton of the Portrait Foundation, a non-profit platform to encourage children and the arts. In recent years, he has been voted one of the most influential people in financial technology by the Wall Street Journal's Financial News and Thomson Reuters. So, ladies and gentlemen, we will have Chris Skinner online with us very soon. Hello, Chris. How are you? Hey,
Excellent.
it's very
How's
good
you?
to see you. How is it going? Can you hear us okay? Can you see us?
I can see you. I assume that you're there with some other people, but it's difficult to see any other people.
Yeah, it is difficult because it's an online event, which always poses a bit of a challenge when you try to see your audience. But Chris, I will pass on the floor to you. You got a 30-minute presentation that we're very keen to listen to, and then we go ahead with a quick Q&A.
Cool.
And whenever you're ready, Chris.
Okay, can someone bring my slides up? There we go. So, hi, I'm Chris Skinner, and I write a daily blog at thefinancer.com, which I've been doing for a long time, over a decade, as well as producing a number of books, of which the most recent is Doing Digital. And Doing Digital is all about banks that I think are doing digital well, which in the current crisis is incredibly important because we've had this lockdown thanks to coronavirus, where everyone's been stuck at home for the last 3 or 4 months. And suddenly everyone's had to work out how to do digital structures because we don't have an office anymore. We have to work from our rooms, our bedrooms, our homes, and that's been a big change to the world. Initially, a lot of people were more worried about the economy than lives. That changed as we realized the seriousness of the pandemic. And then we realized that it's challenging to all of us to wear masks and to social distance and to do things differently. But we are doing that, and suddenly there's been massive behavioural changes. For a while I tried to grow a beard, which was unsuccessful. But equally, we all moved to online conferencing and social calls via video. So there have been some major behavioural changes as a result of this crisis. In particular, a lot of us have stopped using cash. We're far more focused on using card transactions and avoiding contact with each other. So it's very different to the last recession. And the last recession was quite something. It's 12 years ago. I didn't think we'd have another great recession so quickly after the last one. But we are going through another great recession because basically all economies in nearly every country have closed down. Now, what was interesting about the last recession is that was a financial crisis created by the financial system, whereas this is a financial crisis created by the health system. It's very different. But the last financial crisis resulted in the creation of something very new called Fintech. And Fintech rose from the ashes of the financial disaster of 2008 and created thousands of new ideas and new companies to innovate around the integration of technology and finance. In fact, there was almost like a perfect storm 12 years ago where technology matured to the stage where cloud computing and smartphone appeared, combined with a loss of trust in the traditional financial system. And those two factors came together in 2008 to launch the surge of fintech around the world that's now become a multi-billion-dollar industry, and it's still growing. Even in 2020, with all of the challenges we have of the pandemic, fintech is still growing, and a lot of the fintech companies have secured funding before and even during this crisis. So it's not going to end. In fact, if anything, it'll be interesting to see what innovation comes around after this crisis, in the same way as we saw huge innovation after the last crisis. But what's been notable about most of these fintech companies is that they're not like traditional financial firms. They're created by young people like Tom Blumfield, who's just stepped down already as the founder and chief executive of Monzo. Tom's just become the president of Monzo as they expand into the USA. And this is a company that's one of the highest valued fintech startups in Europe, with something like 4.5 billion customers today, and valued slightly less than it was, but still valued very highly in the current crisis. And one of the key things about Monzo, along with all of the other challenger banks like N26 and Chime, is that they become lifestyle institutions for financial needs, because they work on an app and provide everyday banking in an everyday way. And what's been happening with challenger banks is that the traditional banks are becoming boring old banks doing boring old things like borrowing old bills. So they may get your salary and they may manage your mortgage, but they don't do your everyday banking. A lot of people have moved to everyday banking with new banks. Equally, there's a lot of other institutions like TransferWise that have been growing over the last decade, primarily because they do things in a very easy, everyday way. I use TransferWise specifically because I travel around Europe and I live in Poland, but I have a house in England, and I have to move money regularly between UK and Poland and other markets. And this is one of the easiest ways to do that at a competitive rate that's instant and real time. And real time is a key part of this. So, for example, I had to recently pay for some repairs on my car. And whilst I was in the car showroom, I put the funds onto the account of TransferWise to cover the bill. And it took seconds, and I paid the bill within minutes, which I couldn't ever do historically with traditional financial services. Similarly, a lot of these companies have been created by young people like Vitalik Buterin, who was the creator of Ethereum. And Ethereum is the distributed ledger platform of smart contracts that almost everybody is committing to using for the future of infrastructure of industry. But when Ethereum was created in 2015, Vitalik was just 19 years old. And so a lot of companies have been created by young people because they understand and get technology much better than those who are maybe more mature. There's even companies that have been created by 9-year-olds, like this coin that's in Asia, created by a 9-year-old Thai girl that's actually based on distributed ledger technology. So even 9-year-olds are creating companies that change the way we think about money and finance. But generally, I think what we're seeing is a revolution, like Revolut, of money and the way we think about money and finance with technology. And it's not just being created by young people who get technology, but by young people who maybe understand money and finance. Nick Storonsky, the founder of Revolut, was working for Lehman Brothers in September 2008 when they went bankrupt, and went on to create the highest valued fintech company in Europe. And equally, we're seeing others like Stripe that are taking over global platforms as payments and API checkout services. So Stripe was a company created by Patrick and John Collison when the brothers were 21 and 19 years old 10 years ago. It's just 7 lines of code. It's an API to make checkout simple online. And the technology, the code that they created is so fantastic that it's been adopted by huge numbers of other startups that are notable. And that's made this a company that's valued in the billions. In fact, when you look at the valuations, it's incredible. In 2016, the company was valued at $9 billion when it was just 5 years old, with 7 lines of code for merchant checkout online as an API. In 2018, it's valued at $20 billion. So it's more than doubled its valuation in a year. And last year, it was valued at $35 billion, almost doubling its valuation once again in just a year. And in fact, they just did another funding round in March 2020, valuing the company at $36 billion. So they're still storming ahead as a major global platform because it's simple code as an API that's plug and play, and it's viewed as beautiful code. Now, the criticality here is that this is a young company. This is a company that's not even a decade old. It launched in 2011. So it's young and it's vibrant and it's a small number of people doing great things. And when you compare that with the banking structure dealt with most of my life, it's radical because the industrial companies, the banks, were built for the distribution of paper. These guys are built for the distribution of data. The industrial companies are built around a model of buildings and humans. These guys are built around a model of the internet with software and servers. And that's the reason why Stripe is already worth more than 7 Commerzbanks, one of the oldest and biggest banks in Germany. You know, Commerzbank was valued at $6.5 billion in September 2019. Yet it's got 48,000 people compared to the 2,000 in Stripe, and is worth less than a seventh of Stripe. You know, Deutsche Bank is worth just a third of Stripe, and has 91,000 people. And this is the incredible thing, that banks are trying to transform to be digital, but they have far more people and far more infrastructure and far more history to deal with than these young companies have. And this is why the fintech structure is becoming interesting, because the financial structure is very old and the technology structure is very new. One of the key things around this is that we're seeing the banks starting to transform themselves. So the banks, sorry, made a slight mistake of my pressing of buttons there. Try and go back. I'm not sure if this is working. Ah, there we go. So the banks are transforming as well. A good example is Barclays Bank, and Jez Staley is the chief executive of Barclays Bank, a bank that used to be a very prestigious investment bank in Europe, but now is moving towards being more of a commercial banking operation on a global basis. But in 2016, valued at $30 billion, so it was worth 50% more than Stripe, but had 13 times the number of people, well, in fact, 130 times the number of people, 130,000 compared to 1,000. But in October 2018, the number of people had reduced dramatically. And this is what we're seeing across the board, that banks are trying to move towards a different model of financial structure that moves away from buildings and humans and physicality and gets more and more into a distribution of data and digitality. You can see here, it's like a platform revolution that we've seen in all markets, but we're now seeing it specifically in the financial markets, where new companies with small, lean numbers of people that are agile are creating far better, substantial models of value than the traditional companies that have large numbers of people. So this platform revolution is transforming financial services, and the banks are not sitting back and letting that just happen and saying, you know, let it go. They're also responding. You know, they've woken up, they're shaking up, and they're investing billions in technology. You know, JP Morgan Chase invested $10.8 billion in 2018 in technology. In 2019, this figure went up to $11.4 billion. To put that in context, the total investment in European fintech was $22 billion in 2018. So 2 years of JP Morgan's IT budget is the total amount invested in European fintech. That kind of puts a context around and a framework around this, that banks are not being destroyed by technology. They are being disturbed by technology. And I think that's the key point, that so many people think banks will be destroyed by technology, disintermediated, and they won't be. What we're doing is we're transforming the banking system to a new system for the new century. And that's something that JP Morgan understands. I mean, they have more developers and engineers than Twitter and Facebook combined. 1 in 5 people who work for JP Morgan Chase are engineers or developers. That's 50,000 people. Yeah, so a lot of people involved in technology. And it's because JP Morgan Chase understand that they don't want to be disrupted, but they want to be the disruptor. They want to be the change agent. And they're doing amazing things with technology that are changing the game, like using artificial intelligence to automate what historically took 360,000 hours of human legal time, or like automating best execution, which is an incredibly complex process, or like creating their own cryptocurrency for settling payments and transactions within their own global platform. And we're seeing not just JP Morgan Chase, but many banks starting to change the way in which they act and think, and trying to work and partner with these new technology startup companies in the fintech community. I often talk about fintech being the marriage of a grown-up and a child, the partnership between a parent and a child. And it's very difficult. You know, the child is technology. The child is very naive, doesn't understand why the world works the way it works, wants to change the world, wants to kick the walls, break things down. And the parent just wants to keep everything nice and stable and secure and reliable and resilient. This is what finance and technology is like. Finance wants stability and resilience, security and reliability. But technology wants to disrupt, to change, to do something new in a different way. It's a very difficult partnership. And in fact, a lot of banks don't understand this partnership, and a lot of technology startups try and have these partnerships with these banks, and they find it very difficult. It doesn't work very well. The bottom line is that banking is what banks do, but technology is now how they do it. And that's a transformational process that every bank is going through in different ways, and finding it very difficult. Initially, we thought that technology would destroy the banks because banks are like dinosaurs. You know, they're very much entrenched in the Industrial Revolution, which is very true. They are based around physical distribution structures. But rather than being destroyed, the banks thought that technology was interesting. And in the second generation of fintech, they started to say, let's invest in these companies, let's support these companies, let's play with these companies. And to be honest, that's what it was. They were just playing. They were doing corporate innovation theatre. Lots of hackathon days and lots of days for fintech startups to play with big banks, but very little connection into the core bank. What we're seeing recently is more collaboration, where the fintech community is seeing banks that truly want to partner with them, but are finding it culturally very challenging to partner with startup companies for the reasons I've given around the parent-child relationship. But eventually, fintech will be integrated into the core of banking. Technology will be integrated into the core of banking. Banks will have renovated and refreshed, rebooted and renewed. They will be different, and they will be based around the internet. And that's going to be something that we'll see emerging over the next decade, speeded up and transformed and turbocharged by the coronavirus pandemic, because we've had to move very quickly towards a technology structure on the internet in finance. One of the things I could talk a lot about, but I don't have time, is how coronavirus is challenging traditional banks, because a lot of them were caught in the cold over this crisis. I know quite a lot of banks that had a backup for their head office, but their backup was based on a terrorist attack, so they had a second office. They didn't have a backup for everyone working from home. So they've all had to move to cloud in the last 3 months, or try to move to cloud. And that's been a big wake-up call and a big challenge. But we're seeing this movement radically transforming banking, and it is being integrated into banking. So when I was working on my latest book, which has just been released, called Doing Digital, I actually sat down and I thought, a lot of people are criticizing banks as being useless and stupid and don't get technology, and they'll be disrupted and disintermediated and destroyed. And I didn't see that at all. I felt that banks are not useless and stupid and disrupted, but they are fundamentally challenged by digital transformation. Because how do you change a 200 to 300-year-old institution to be a 21st century company on the internet? So I wrote down the banks that I thought were doing digital well, and I ended up with 5 names of the biggest banks in the world that I thought were trying to do digital well: JP Morgan Chase, BBVA, ING, DBS, and China Merchants Bank. And I reached out to them and asked, can I talk to you about what you're doing and see what lessons we can learn from what you're doing? And luckily they all said yes, and I ended up with over 30 lessons from over 40 interviews with these 5 big banks. And the lessons fall into 4 big buckets, which is working out what to do, how to do it, doing it, and then doing it better forever. Now, these 4 big buckets are actually what seems very simple, but takes a lot of time to go through this process. In fact, the hardest part of this process is the first 2 phases, working out what to do and how to do it. And I think this is typified by the comment from Charles Darwin about the origin of species and survival, which is, it's not that whether you're the fittest, the strongest, the fastest, or the most intelligent that survives. It's the most adaptable to change. But changing in the right way should be added to that statement, because if you change in the wrong way, you're going to fail. And I see so many banks changing in the wrong way because they're changing to be digital as a project and thinking of digital as a channel and delegating it to a project and a function, when actually it's more of a fundamental restructuring of the organizational mindset and recreating the business around the internet. That, to me, is the fundamental survival question. Are you restructuring the traditional financial firm around a digital platform in the internet age? Working out what to do, nearly every one of the 5 banks I spoke to, in fact all of them, said they started by writing down who they thought did digital well, and companies that they noted are the ones we would all think of, like the Amazons and the Alibabas of this world. And they went and visited with them and they said, how do you structure, how do you do things? And a lot of the lessons they learned are now being internalized. For example, the 2-pizza team idea from Amazon. And you may be familiar with this, but the idea is that the company should be structured around very small teams that are agile. And if the team needs more than 2 pizzas for lunch, the team is too big. The ideal team size is about 10 people. I was amazed to see in a couple of these banks that developers and designers were integrated with the product and risk and compliance people, and they were all working together in very small teams. And one of the banks said to me, every time that they have to make a decision around the future, they ask, well, what would Jeff do? And I didn't connect it to Jeff Bezos, but that's what they were saying. What would Jeff Bezos do if he was making this decision within the bank? Those are guiding principles for these organizations. They think like big tech companies. And it took them about 1 or 2 years to work out what to do. Then they had to work out how to internalize that in their own organization. How do you bring the external lessons to be internal? One of the big surprises came from one of the banks that I interviewed, who said they actually spend a major moment where the board of the bank gave the backing to the chairman and chief executive to say, focus on business as unusual. Don't focus on business as usual. We all look after shareholder return and the financial metrics. You focus upon business transformation and change. And I think that's the fundamental point, that it's very difficult to do business as unusual if you have to deliver business as usual. How can you focus on business as unusual? How can you focus on change, transformation, if you have to deliver everything that everyone always expects? It's not going to work. And even if you have that mandate, how do you change the organization? To change the organization, you have to have a burning platform, something that ignites and disturbs the people within the business to change. And then if you ignite and disturb the people, you then have to give them a way in which they have to move. Where are we going? So all of these banks had a moment where they had a burning platform, a critical issue, which they shared with all the people, saying, if we don't transform, we're going to die. And this is where we have to transform too. This is where we're going. Join us on that journey. So one of the key things around how to transform is making it customer-centric. And that's another key thing that was consistent across all these companies. They all talk about customer journeys, customer experience, and being customer obsessed, something that they also learned from Amazon, I guess. And that took another year or two. And then actually doing this transformation is hard. You have to change the organization and the culture and the people and the mindset. And changing people is difficult, particularly if people don't want to change. So that's a big question. How do you change the people? One of the big issues in every company is the frozen middle of the organization that tries to stop change happening. How do you get the middle of the organization to change, particularly when middle management have grown up and gained their role and their capability over years or decades, and they're worried that they're going to lose that power or that skill that they've gained. Equally, are they skilled for the new organization? How do you reskill people? Quite a few of these banks would provide everybody in the organization the opportunity to reskill. So, for example, branch managers could go into an innovation center and learn how to code in Python for an hour every day to get new skills, to transition to new roles. And equally, when you end up with this new organization, how does it work? ING said to me that there used to be 30,000 people working for the bank, and now there are 3,000 teams working for the bank. So the role of management is to orchestrate 3,000 teams or synchronize 3,000 teams. And that, I think, is another critical point. It's around synchronizing the organization, not managing the organization in the way that it used to be done. And that's critically around fast communication and fast decision-making. What amazed me is quite a few of these banks allow these 3,000 teams to get access to decision makers within hours. Some of these banks were saying that if a decision needed to be made by the chief executive, they could get that decision made that day. They didn't have to wait for months to get a meeting in their diary. They could get a decision that day from the chief executive. So digital transformation of a financial institution is difficult, but it can be done. And one of the things that I discussed regularly in my circle is, why don't we just launch a new bank and, let's not go through this process? And my answer is always, you have to transform the old bank. Otherwise, what are you going to do? Just let it rot? Let the customers rot with the old bank? Let the employees rot with the old bank? Why would you not transform the old bank? Yeah, it's difficult, but you have to do it. And once it's done, which takes about 5 years, maybe longer, then you have to keep doing this better forever. You have to keep dealing with change, keep dealing with technology. And the underlying aspect of this is data, and data is the air that we breathe. Data is not a fossil fuel, it's not oil. It's the air of the financial institution. It's what enables it to be healthy. And the better the data is organized and managed, the easier it is to breathe. And this is where we want to end in terms of transformation, to be a digital organization leveraging data that gives us customer intimacy for a unique customer experience that bridges across thousands of partnerships. I could talk about so much more, but this is summarizing pretty much some of the things that I've been going through in my experiences. But I'll end with just a final thought on the coronavirus pandemic, which, as I say, has transformed and turbocharged digital for most traditional financial institutions to be the priority right now. And I think that the end game here is that we're seeing everything going away in terms of physicality. Customers have realized when they have to be locked in at home for months that they can do everything online. Thank goodness. But is the organization geared and ready to do everything online for the customer? And that's what I think we've woken up to in the last 3 months. Thanks for listening. I hope it made sense, and I'm ready to take any questions.
Thank you very much, Chris. This was a very interesting presentation that I'm sure not only me, but everybody else has also enjoyed, because I have a couple of questions to actually ask you from our viewers at home or in the offices. This one's an interesting one. Are there any technologies that were only part of sci-fi books and movies before, but now became a reality in 2020?
Well, I mean, the main reality in 2020 is the move to cloud, which is not something we hear much about in movies and science fiction, unless you want to talk about Skynet in the Terminator, Cyberdyne Systems. Most of us before the pandemic were talking a lot about artificial intelligence. But if I'm honest, artificial intelligence is still pretty dumb. Most of the artificial intelligence that's discussed is things like chatbots, and a chatbot, to be honest, is not that intelligent. It's very basic. What we should see is artificial intelligence becoming much more intelligent over the next few years. And if anything, you'll see that being led by China. I talk a lot about how China is leading the world these days, including creating diseases. But China actually has been leading the world with technology for quite some time. And some people debate this point. I saw something recently online saying, Alipay and WeChat Pay aren't that great. But if you look at Alipay in particular, and I have a slide I sometimes use, they have a structure based around the super app, which is the social, commercial, financial interactions and interchange as the front-end experience for the customer. But behind that, they have the Alibaba Cloud, Alipay and Financial, which is the payment system, financial system. But specifically, they have a artificial intelligence system around data management called Ali Mama, because Mama looks after Baba. And that data management system is the criticality. So when I say data is the air, I think that's the core technology that we have to focus upon around how do we use data and leverage data to create better customer experience.
So effectively, we're saying that we are looking into China becoming a leader. Well, obviously, we can already probably see China as a leader in the technology industry either way. But you're saying AI. Do you think that that poses any kind of risks to the entire world?
There's always risk. There's always fear of the future. There's always fear of change. And that's a basic human thing, which is we always worry about the march of technology and innovation and progress and what it means for human rights, for example. At the end of the day, you have a balance. When you look at politics and government, some countries have far left, some countries have far right, most countries have something in the middle. And that's because we as humans create a balance that stops the extremes. And we'll do the same with technology, that we'll worry about the extremes of technology progress and what it means for human rights and human activities, but we'll manage that balance through the whole way in which we structure our organizations and our work.
Hopefully, it doesn't require us to fall into any kind of pitfalls before we actually find that balance. But I have another question from the audience, from online in the chat platform. So the question sounds like this. Some say that there is a banking crisis looming not far in the horizon. In this case, how do you see it unraveling, and do European banks fall first?
I mean, I don't have the answer to this one. I'm quite happy to say that I can predict the future with technology, but when it comes to economics and politics, I have no idea. So right now, the banking system is being propped up by a lot of government support, as is the whole of the financial and economic system. And the question, I guess, is more geared towards how long will that governmental support last? One of the articles I saw today, in fact, was talking about the exposure that banks have in what will be non-performing loans. And that is a big concern. Having said that, I'm fairly sure that whatever happens, governments will sort it out as they did 12 years ago. So yes, we may have another financial crisis right now, and we may see a lot of banks moving towards the brink of extinction. But I'm pretty sure what will happen is we'll just get more bouts of quantitative easing and governmental activity that plugs the hole, or hopefully plugs the hole.
Yeah, well, you have to have a crystal ball to be able to predict with accuracy, right? And we don't have that here right now. So let's move on to another question. And obviously, there has to be at least one question about Brexit, right? So, and the question sounds like this. London was a financial center for a long time. Do you think that it will potentially, or is at risk of losing its title now that Brexit has happened? And will London find potentially other ways to lure in financial firms?
I mean, London and the UK has a lot of things in its favour, which has nothing to do with being part of Europe. It's to do with openness, light regulation, governmental support of innovation and technological capability, and the skill sets of adjacency between the financial community, the technology community, the regulatory community, the community of change. And yes, a lot of other cities have this. You know, Vilnius is a fantastic centre for fintech innovation as well, for similar reasons. But the critical mass of talent and people is what makes a difference with London, in that although Vilnius has a great capability for fintech, it's quite a small place, and London is not. So you have to take that into account. And when I take that into account, it's the reason why I don't see the same adjacencies of talent and capability in Paris, Amsterdam, Frankfurt, or other places. And it's really to do with the size of the metropolis. It's the size of that centre that makes it unique. And someone said some time ago that countries are no longer countries, cities are countries. So London is a country. If you think of it that way, it's nothing to do with being part of Europe. It's to do with being a global centre of talent and adjacency and capability.
So effectively, we're moving back to ancient Greek times with polises, right, rather than an actual country. That's what's becoming important. A quick question on an unrelated note, and probably will be our last question for you, Chris. Do you see any of the tech giants, as Amazon, for instance, to move into the financial sector?
It's a question that comes up regularly, and that I blog about regularly, and that whenever I blog about it, I say Amazon, Alibaba, Facebook, Apple, they all make more money out of banks than they ever would by competing with banks. So why would they compete with banks? When banking has far more regulation and far more oversight from government than technology, It's a pain to even get into this space. And to actually try and compete in that space is going to bite the hand that feeds those companies. So they'll never move into full-scale banking. They'll move into a lot of areas of banking services that are not core, like credit and payments, loans and savings. But full deposit services and full commercial banking services, no way, never.
Thanks very much. Chris Skinner, one more time, ladies and gentlemen, you can send your virtual applause, love, and hugs to Chris. Thank you very much for actually spending your time with us today and honoring us. So thank you. It was a pleasure, Chris. And you will be able, I saw a question pop up really quickly on the screen. Will the recording be available? Yes, it will. Look out for it tomorrow. And Chris, one more time, thank you for your time. Enjoy the rest of your day.
Thank you for having me.
And now, ladies and gentlemen, thanking Chris Skinner one more time for spending a little bit of his time with us today, I will move on to our next panel. The moderator of the panel is Jean-Louis Van Heuve, moderator and founder and CEO of MoneyZ and chairman of the board of Fintech Belgium. He and his panel are going to try and answer the question, challengers versus incumbents, agility and customer acquisition. Who won? Who lost? Ladies and gentlemen, your attention to the screen.
Hello everyone, my name is Jean-Louis Van Heuve. I'm the chairman of Fintech Belgium, and today the objective of the day is to understand, the neobanks, the challengers versus incumbents, and understand in the agility and customer acquisitions who will win, who will lose. But before starting this debate, let me introduce you the three speakers, and maybe we should start with Sarunas. Thanks for introducing yourself, please.
Hi everyone, so my name is Šarūnas Legeckas and I'm a general manager of Greater Europe at N26.
Fantastic, you have been very brief and brave. So let me switch to Jeffrey.
Hi, my name is Jeffrey Alberts. I'm a partner at Prior Cashman. I work in New York, and I represent banks and fintech companies in regulatory matters, representing clients both based in the United States and outside the United States.
Very cool. Thank you very much. And now, last but not the least, Mantas.
Hi, everyone. My name is Mantas. I'm the CEO of Verifo, a growing business-focused electronic money institution in Europe.
So thank you very much. So we have very exciting subjects, always the neobanks, the new entrants, and versus the incumbents. My first question is respect to agility, and I will maybe start asking our friend from N26, Sarunas, what would you think is the most important factor of agility, because agility can cover many things, but what is really agility for you?
It's a very broad question, of course. I could answer it in many ways, but I guess we are talking about our topic of incumbent banks versus digital banks. So I guess a very big advantage of digital banks is exactly agility, and what allows digital banks to be agile. A few things, and one, the most important thing is infrastructure, right? So we know that incumbent banks are struggling with these central banking systems that are built in 1980s that are very costly to sustain. They're slow, and banks are not willing and not willing to risk and change the infrastructure. So I think digital banks have a big advantage here because most of their infrastructure is on cloud. That allows to create products much faster. Second thing is I think fintech, like digital bank, we have more people than from financial technology. So I think people that work in digital banks, they are used to startup agile environments, and I don't know, they can adapt faster, they can build products faster, and that would be agility for me in a very short sense.
Thank you very much. Maybe the point of view of Mantas of Verifo, with that respect, agility, and especially with respect to infrastructure. Do you share this view?
No, of course I agree. I agree that technology plays a big role here. I would also like to add that incumbent banks are comfortable as a startup or as a growing business, whether you're self-funded or, in the case of bigger neobanks, if you receive investor money, you get quite a lot of supervision, so that helps you react quicker. Another big thing is also feedback. So listening to customers, and I think we as a fintech community, we've learned this lesson, and we're trying to listen to the customers, react to their needs, and not necessarily doing everything as we've done for the last hundreds of years.
And listening to the customer, because one thing behind agility is, as I understood, is really the ability to have the digital infrastructure and to be faster and more agile. But also one thing which is of paramount importance is the customer intimacy, the customer experience. Maybe again, for our friend Sarunas, what is the, for N26, how do you really think you compete against incumbents, and what are your trumps, with respect to that?
Yeah, so as Mantas rightly pointed out, is, you know, I think the biggest difference between digital banks or fintechs in general and incumbent banks is that being customer centric, right? We have Netflix that transformed the entertainment industry. We have Amazon that transformed commerce business, or Uber that absolutely turned around the taxi business. So the same is happening in the banking or financial services world now. And I think one of the most important things is exactly the customer, being customer centric, listening to the feedback, creating a smooth customer experience, right? We sometimes are asked, this incumbent bank just also released a mobile app that is nice to use. They also have a mobile online banking. But it's not about just, creating a feature or a set of features. It's about creating this flow of like a very great experience, which I think is a very big difference that digital banks can offer.
Okay, thank you very much. I will come back to that because, when we look into Europe, I'm in this fintech industry for years, and we see that the incumbents are adapting themselves, and to a certain extent, they have been working on the infrastructure. They've been understanding the lessons from the fintechs. But I'll come back to that because I'd like to have an important questions about regulations coming also from Europe. The Payment Service Directive 2 is really introducing a massive amount of turmoil, of chaos, but of course, from chaos, you can have many opportunities. But with respect to that, could you highlight what's happening, of course, Jeff, what's happening in the US that you think would really spark even more competitiveness in the market of the US and the ease of the neobanks of entering this market and being more successful. As we see today, it seems that neobanks are more popular in Europe in proportion to the US. So what's your point of view, Jeff?
Sure. On the regulatory issue, one of the main barriers that we've seen in the past is the fact that every single different state within the United States has the right to regulate any neobank that comes in. So that's been a huge problem for any bank that's trying to enter the U.S. market and has to deal with all regulations. Now, if you're a formal bank with a charter, that supersedes and you only are regulated by one federal entity. But if you are trying to start up and do business in one of the 50 states, you have to deal with different regulatory requirements from every different state. So what happened is the Office of the Comptroller of the Currency, which is a federal regulator, tried to create this fintech charter. And that was a great opportunity, but they immediately got sued by the banks that want to take control and didn't want to give up their right to regulate these institutions. So right now there's a fight going on in multiple different court proceedings between state regulators and federal regulators that are suing to see whether or not regulations will be opened up, which would allow neobanks to come in more quickly.
And that's, in Europe, we are most of the time complaining that, of course, the EC is not homogeneous, but at least for the payment perspective with the Payment Service Directive, we are pretty happy being a fintech, obviously. So to that respect, in the US, do you think that a kind of PSD2, a type of regulation might happen over time?
It might happen over time, but it's not going to happen anytime soon. So far, actually, the states have been winning in the battle with the federal regulators over who's going to end up getting to control this space. So I think in the long run, you may see that kind of shift, but right now you really aren't seeing a lot of movement in that direction. And one reason for that is there's not a huge consumer demand here. I mean, there may be a kind of suppressed demand, but consumers here aren't clamoring for more neobanks. And in fact, your last question dealt with agility. One issue that we saw recently in the United States is some of the fintech companies were agile in some ways in responding, for example, to the coronavirus and the payment protection program loans. But some of them were even less agile than the banks because they didn't have, for example, if a huge call volume came in, more traditional banks sometimes had an ability to hire a bunch of call centers more quickly than a smaller fintech startup that got overwhelmed. And we even saw some of the fintechs had their websites crash because so many people were trying to get in and apply for the PPP loans. So agility can cut sometimes in favor of upstart neobanks and challenger banks, and sometimes can cut against them.
That's very interesting. Maybe coming back to, before the question about regulation, I was mentioning that there were things behind agility and customer intimacy. And maybe for the N26 perspective, Sarunas, what would you think that would be, or that has been the ingredients of your success behind agility and customer experience? Because this is pretty general, but what were really the specific elements of N26 success as opposed to the incumbent, and how do you think that this could be used or replicated in these states?
So there are a few things, right? So I wouldn't call this a not success, and I like how everyone wants to oppose digital banks and incumbent banks. So I would like to say that what I'm most excited about is, I'm going to give you an example of Uber and taxi industry in general, right? Before Uber was born in New York, let's say, taxis would be smelly, the drivers would be rude, the pricing would be not competitive, and it was a common problem across the world, right? When Uber and similar services were born, everything got much better. We have a much better competitive pricing, the cars are nice, the drivers are polite. So we all, as a customers, benefited, right? So it's exactly the same what's happening now. So N26 is the Uber of the banking industry, right? And because of that, most of the incumbent banks, they have to step up their game. They have to improve. They have to launch mobile apps. They have to launch mobile payments and other cool things. And what is even more exciting is that regulators, which are usually viewed as these rigid, also very conservative bodies, are also adapting to that, right? And I think we need to be very happy that we have this great competitive advantage in Europe over US, as Jeff mentioned, is that like N26, we took a banking license from ECB in 2015, and we are passporting that license to all the European markets, right? So we don't have to comply to the regulations every market. We are just regulated by BaFin, by German regulator, and we're using the same banking license. That's an amazing foundation for innovation. And it's similar across the board. You know, I think N26 was one of the first to introduce fully mobile KYC process and onboarding, where you could open a bank account in 8 minutes and so on. So these are the things that creates a huge advantage for N26 or other fintechs and for Europe. So that's why we see that, you know, fintechs are going from Europe to US, where usually we see that, you know, companies from Silicon Valley or just in regular from US, like big companies like, I don't know, Airbnbs and Netflixes of the world are coming to Europe. So I think we have this competitive advantage in this particular case, and I'm very, very excited about it.
Very cool. But as you said, actually, and we were also introducing with this idea that the banks are reacting to the fintechs, they are learning from the fintechs. A lot of times, or in many instances where the fintechs are not really competing with incumbent, but rather, which is not your case, I believe, of N26, but rather collaborating. But maybe that's a question for Mantas. You know, if the banks, you know, are adopting these very cool UX, user experience, increasing price transparency, and we will come back to Jeff to see whether this is happening in the US. If these are going full mobile, providing digital service and leveraging obviously their asset, which is their customer base and the trust of customers that are customer for, you know, when they were 6 or maybe not 6, but 12 to 18 and beyond. What do you think that if the banks are truly adopting all these criterias of and the USPs of the fintech, or would you as a fintech respond to that? What is the never-ending reaction to these incumbents that reacts and to adopt or copy the fintech, if you want? So what is your point of view, Mantas, on that one?
I actually, I would say that this is a very good question, very on the topic. I would say it's very early to call who are the winners. I think the banks are still doing quite well. I think during the coronavirus pandemic, in the recent months, there was a lot of flight to safety. So, you know, you can always have people jumping on the new cool thing in your mobile phone. But then once you really talk about bigger amounts or keeping the funds safe during certain times, I think it actually is the brick and mortar businesses, so the old banks that are benefiting or still have a lot of advantage, at least in terms of perception in the public. And I think the biggest winners here would be the consumers. So whether the banks copy some of the things that we do, of course, we still work a lot with the banks. We want to have swift payments. You go to the banks. So there's a lot of cooperation, and I think what's going to happen is more market segmentation. So banks will probably still, or at least a good time, keep the big corporates and then more advanced services, whereby more agile, more cost-effective neobanks or EMIs or money remittance businesses can take on all of these simple day-to-day tasks, keeping your budgets and similar services.
Thank you, Mantas. Maybe a question for Jeff, because I was prompted by, what just have been said by our friend Sarunas and Mantras. You as, as being a legal guy that is accompanying, US firms for the responding to the regulator and maybe European firms, are you today, let's say, called by European players that try to invade or try to start the operations in the States? Do you see that happening?
Yeah, we definitely see it happening. I think from the people that I've spoken to in the industry, I think there's a perception that the traditional incumbent U.S. banks are more sophisticated in their use of technology and offering consumers what they want. And I think in Europe, at least in some markets, there was a real advantage where people would go in, be very consumer facing, super consumer friendly, offer them new things that they didn't have, toys, gadgets, abilities to monitor their wealth. But banks here have been more aggressive, more incumbent banks have been more aggressive in adopting those types of things, which makes it hard for a neobank to come in and take away consumers, because if the consumers are happy, they don't want to leave. And there's still that, and there's that brand recognition that it's hard to undermine. So a lot of people are coming in, but I think the most vulnerable players are not the large traditional incumbent banks, but the smaller regional or even community banks, because those banks really don't have the ability to pay for the development and constant change that would be necessary to be agile and respond to what their customers want. So I think neobanks that are coming in are often targeting those community banks as opposed to targeting the very large incumbent banks here in the United States. And I think there's a larger segment in the United States of these small mom and pop community banks than there are in Europe.
So would you say then that for a neobank to be successful in the States, it's really a very smart adequation of a very specific product offering to a specific market segment? So it's really customer market segmentation that will make these new entrants successful?
That's what people have been saying so far. It's always possible somebody will come in with an incredible new product that will pull people in, or even a marketing campaign and a similar product that will pull people in. But I think the easiest way to enter the U.S. market is to pick some small segment, really target it, and offer them something that they otherwise wouldn't have.
And Mantras was also mentioning the branches aspect, because everywhere in the world the branches are not disappearing but shrinking massively. And then he was mentioning some kind of the digital type of consumer potentially, where you examine the offer on online and then you go physically because it's about your money, and the people they need trust. Do you think that the American incumbents are really playing this digital aspect of the consumer and approaching the consumer?
Well, they have to now. I'm based in New York, and the branches are all sitting there paying rent for branches that are closed and nobody would go into anyway. So I think that's right now. There was already a trend towards that, but the way things look now, it could be a year or more before the branches start opening, and I think even longer before people are comfortable going into them. So I think that's really accelerating the shift towards more of a online focus instead of a branch focus.
So maybe a question to Sarunas with respect to the neobanks. Some people would argue that actually, proposing a card with some kind of personal finance management, it's a pretty thin as kind of feature to differentiate. If at a certain point in time the bank says that's happening in the States, but obviously also in Europe, are copying, your cool end user interface and moving on with key features that are really very cool. I'm an N26 user, by the way. But do you think it will be sufficient to resist to the banks and the incumbents? What do you think about the perspective on the long term? Because you teach them how to be cool, but then if they all become cool.
So first of all, congratulations on making a right decision and choosing your digital bank. So I'm very happy about that. In the long term, of course, nobody knows how it's gonna turn out in the end, right? But I think nobody in this panel or in this conference could argue that a bigger part of the retail banking, at least, will be occupied by digital banks. I think it would be very difficult to find arguments why it's not happening, right? I guess where the more incumbent banks have more experience, more wealth, is I don't know, corporate world, wealth management, and other things. But in regards to creating a consumer layer, creating a good basic retail banking experience, I think digital banks gonna win this eventually. We're already seeing, that the penetration rate of digital banks in some countries are very, very high, and it's just a matter of time. Is it in 5 years, in 10 years? It's very difficult to tell. I think coronavirus actually accelerated that process, that people wouldn't go to branches. And like Jeff told an example of how digital banks couldn't manage the loads, which could be the case in maybe in some cases. But for instance, we saw a bigger growth in signups and in deposits as well during the corona. Because one thing, N26 is a fully licensed bank, so our deposits are secured by 100,000 euros deposit security scheme, like any other bank in Europe. So we also saw a big acceleration in mobile payments. And yeah, all kind of signs show that I think the whole digitalization process is just accelerating faster maybe than even anticipated, right? But again, I don't think this all competition is not winner takes it all, right? It's gonna be, I think, people choosing different banks, whether you are, sticking to more like you need this branch, physical branch where you go and meet your manager, get a coffee, and there is a part of society that really wants to be fully digital. And even with N26, in the very beginning, a majority of our customers were millennials from 20 to 40 years old, and now we have all this customer of 90 years old, and the biggest growth in the last year is actually in the target audience of 50 to 65 years old, right? So I think all these signs just showing that digital banks are penetrating the market. It's just a matter of acceleration.
But so when you say digital bank, you include the incumbent as well, I suppose.
No, I more refer digital bank to like digital only, like N26.
Neobanks.
Yes.
Okay. But as I hear, you are mentioning the millennium and so forth. So that means that you are. Is it your idea or the your view that you are targeting product market segments, or what's your view on this marketing approach?
So, N26 started not that long time ago, 7 years ago. So we've got a lot of people that were early adopters, right? So, of course, the majority of our initial customers were very well-educated people from business background, that higher income, that travel a lot. And this is where majority of our customer base was in the very beginning. But what I'm trying to say that now with more education, with more presence and brand awareness, we're seeing that the shift is changing, and it's going to like older population, different income groups, and just kind of reaching a wider society in general.
Okay, but I'll come back to you with the breadth of services that because you don't offer all the breadth of services that an incumbent bank is offering. But for Mantas, in Europe we have many neobanks. We have also many new PSPs, payment service providers. You have massive amount of money that is poured from VCs, from private equity. Do you think that to a certain extent that we could reach a kind of bubble, a little bit what we knew in some other sectors, in telecoms, in the broadband, or where at a certain point in time a lot of investors are trying to pour some money, but at the end of the day, do you think that the rhythm of and the acceleration of number of new players with all this money and this equity that is poured to them, do you think that to a certain extent that we will reach in Europe some kind of bubble in the sense that you have too many players, and maybe that will be a wave that will obviously go towards the States, but let us maybe just see this in Europe. What do you think would happen?
Oh, I'm sure that's going to happen. I think it is hard to take on an incumbent bank, precisely of the reason that you mentioned, breadth of services. You keep your pension, you get your insurance, and a variety of different services from a incumbent bank. It's very easy to open a neobank account, which is one of the selling points, but that doesn't mean that you close your incumbent bank account, which, if you check the data, doesn't happen. So a lot of the customers just pick a few neobanks. I have probably 10 or so. And you pick the best players for best services, and I think that's the beauty of it. I think that's also the secret to being successful in the market, just finding your own niche and competing there. And Europe, even if we have similar regulations, is very different. You were able to open an account in the UK 8 years ago when I was a student there. It was, through post, so not ideal, but you still were able to do that quite a long time ago. And in Lithuania, for example, at the moment, you wouldn't be able to do that with an incumbent bank. So there's a lot of variety, and I think it's important to recognize your strengths and your markets and be successful there.
So Jeff, what do you see? You have been discussing about the kind of regulation hurdles with the difference between the federal and the states. But what do you see that the neobank, or do you see a lot of investors, supporting the introduction of either European or American players? And do you think that the neobanking, the number of players is increasing, and you see a really steady growth, and you believe that it will be steady for the next 2 to 5 years? What's your view on that, on the dynamics of this market?
Well, it's not really steady growth, and that's partially because one pattern that you've seen in the United States, and I think it's part of the strength of the incumbent banks, is that many times the very most successful neobanks or fintech companies that start doing business and start having an attractive platform will shortly thereafter be purchased by an incumbent bank. So I think because of that, you don't see a steady increase in the total number of players, because many of them get eaten up by the incumbent banks. And that can be the result of their very success, is that they cease to exist. So I think in the long run, I think partially because of that regulatory issue that I mentioned before, it often ends up making more sense for the most successful fintech platforms and neobank platforms to be purchased by a big bank that already has a license, as opposed to try to compete with them straight up when they don't yet have a banking license, and it's very difficult for them to obtain one.
Okay, so on the dynamic of the market, do you think that the regulator is trying to play a certain role in order to ease this, the starting of new players, in order to have a competing market that is a little bit more stimulated?
Well, definitely, but it depends on which regulator you're talking about. Right now, the acting comptroller of the currency used to work at Coinbase, which is a cryptocurrency platform here in the United States, and he's been very supportive of fintech companies. And the previous comptroller, similarly, was very supportive of fintech companies. But as soon as they tried to develop a new license that would be of use to these fintech companies, they got sued by the states. states. So I think while the states pay a lot of lip service to being interested in enhancing the competitiveness of fintech companies, so far they've really been a barrier, and they've stopped the federal regulators who want to open things up from moving forward.
So that does it mean that as a result that the tariffs of the pricing of the American banks are not really under pressure?
Yes, they are not really under pressure from neobanks at this point.
So not yet. So it will. There is a lot of work to be done. Then I guess.
I think that's right. I mean, one thing that will be interesting to see is if there does come a point in time when these regulatory problems are solved. A lot of people are concerned that a lot of people who are focused on the U.S. are concerned that what will happen is shortly thereafter, all these sophisticated neobanks from Europe will flood in, and we won't really have homegrown cutting-edge neobanks because we've been suppressing them with our regulatory scheme. So if you solve the regulatory problem, it could be a huge opportunity for more experienced, well-developed neobanks from outside the United States to come in and take a big piece of the U.S. market.
Okay, Sarunas, maybe to see the perspective from the services. So you as a neobank, most of the time you start with a card, you have an account, you are aiming at people or youth that where it's more difficult to have an account sometimes. Some kind of services like exchange rates, being able to buy on the internet, to have a cool view of the expense. But obviously you are not offering the breadth of services that a bank, a traditional retail bank. How do you see the rhythm of new services that neobanks will or should provide, and what would be the pace of these new services? Obviously, with the perspective of N26, but also what you think should be the case for the neobank phenomenon.
Okay. Do you mind if I take 2 seconds back and just comment on the US part? So Jeff was sharing his ideas, and as you know, we were the first neobank to enter US market. Maybe it's almost a year ago now. And even though I don't have much experience, I'm more responsible for European markets. But in general, as Jeff was saying, having the strict regulator and protecting the consumers is a wrongdoing in the sense that consumers cannot freely choose better services, better products, cheaper products, transparent services, right? And even though Jeff says that they have very good banking products, I could slightly disagree. I have different opinion. Having had few businesses in the past and worked with Americans, I was really surprised when they would say, "Shunas, I need to make you a bank transfer, so I have to go to my branch, deposit money, and so on." So I think American consumers are underserved, and there's so much room for improvement, and that's why neobanks are looking and entering U.S. market. Of course, United States market is very, very competitive, and consumer habits are slightly different from European. So it's going to be very interesting to observe how N26 is doing there, how other banks going to be doing, whether it's homegrown or from Europe. So yeah, just to close that topic, I think it's a very, very interesting thing to observe. Coming back to your initial question about the services. So Rome wasn't built in a day, right? So you have to build up your services step by step, and one of the most important things for a bank is trust. And a lot of incumbent banks actually lost their trust many, many times. Starting with the crisis of 2008, many money laundering scandals that are shaking up Europe and Scandinavia now. Numerous power abuse situations. So it's not new. I think customers around Europe, at least, they're tired of banks, and they're looking for something fresh, and neobanks is that fresh service that they can use. you see only maybe from, as you are a Belgian customer of N26, you only see, a current account, a debit card, and few other services. But N26 already offers a variety of services, or overdraft, savings product, and investment products in our core markets like Germany or France or Spain or Italy, and experimenting with a wider range of products, which I think gonna come to the wider Europe and other N26 markets. I think it just takes time. We wanna get the basics right, and we see there's a lot of potential to really get the basics right before we keep adding those products. Then hopefully we have this modular infrastructure as well as modular structure of the company where we can plug and play with different services and have the possibility to do that and be innovative.
Very good. One question about the data. Obviously, in order to have personalized the services, the understanding of data to make it relevant to the user is of paramount importance. What is your view on these type of services? How do you think that digital or neobanks would be better or are better off because from the start or from the outset they can build the data strategy to better to better service their clients? What would be your view on that?
So, I think we have very strict GDPR rules here in Europe. Also, N26 is a regulated bank, so there are certain regulations and compliance requirements around security, but also around data protection. And especially we are regulated by BaFin, one of the strictest regulators in Europe. So all the data that we keep is anonymized, and all the algorithms that are building and all the suggestions they are making on anonymized data. So I don't see a big challenge here.
Okay. Now, maybe a question of cryptocurrencies, and maybe this is a question for Mantas, which is doing payment services. How do you see the progress? Maybe it's a poisonous type of question, but maybe the answer is very, very short. But how do you see, the crypto assets and cryptocurrencies, moving on in the payment industry?
Topic. I think there's a growing understanding of the technology and acceptance. Of course, there are bad examples and history and some bad uses of cryptocurrency, which probably limit the growth. For example, you have regulators across the EU that have a very different understanding of cryptocurrency, but I would say that the majority of cases it's becoming more and more regulated, which means it's more and more acceptable, and just the other areas or other countries have to catch up. Estonia is being probably the most popular jurisdiction in Europe. For that, Lithuania has introduced laws and regulations, so for it to become acceptable. And I think there's a lot of challenges still, but it's growing.
And would you say that the fintechs would be more tuned to start new type of creative services based of crypto than the incumbents?
Yeah, of course. And you would see that a lot of banks, especially in Germany, are quite crypto friendly. I would say.
Okay, very good. Jeff, you mentioned that the guy from Coinbase was becoming, having a very important role in the regulation. What is the status of the? Do you receive many, clients or potential prospects are trying to invade this type of technologies and provide new ways of paying in the States?
Well, there's definitely been a slowdown in that because of a lot of enforcement actions that were brought a couple of years ago. But I've been representing entities in that space for a very long time, beginning back when I represented the individuals that created Ethereum and continuing through the present. And I think right now, as you get people in government that have a background in cryptocurrency, that's definitely increasing the acceptance. They face the same 50-state problem that other banks do. But I think cryptocurrency users are a good example of what you referenced earlier, which is a niche market. So I think large banks are very leery of the risk that might be associated with cryptocurrency, and that creates an opportunity for a new startup company that can really focus on that niche and take it over.
And also with respect to data protection, as you know, in Europe, we have the GDPR, and there is nothing such that in the States. But is the data protection, is this something that is under the control and the supervision of the regulator of financial services in the States?
Well, so again, the different states have different standards, and I think right now the driving state standard is California. California instituted a fairly restrictive set of rules that relate to how data is handled, and that's causing most national companies to have to comply with the California standard, which is more strict than a lot of other states. But there hasn't been any agreement by all of the states to adhere to that standard, so you still have a problem where you never know if another state is going to adopt a new data protection standard that is more strict in some way, and that requires companies to be constantly tweaking their data protection rules to ensure that they're complying with all of the states in which their consumers are located.
And coming from incumbent, as you have explained to us, that the incumbent are very aggressive in the sense that moving, their ass in order to improve the services to the consumer. Do you see a massive use of new services based on data science and AI in the States, as provided by financial incumbents or players?
Not really. I think consumers aren't sophisticated enough, for the most part, to distinguish between the data privacy offerings of different institutions with which they do business. So if there's a scandal in some way, so if there's a hacking event or if there's a leak of consumer data, that can impact how consumers respond. But it's difficult for consumers to assess that type of difference between different incumbent banks.
Well, thank you very much. I see that we have 10 seconds to go, so maybe it's a good time to conclude. I would really thank you, all of you, Sarunas, Jeff, and Mantras, for sharing your view on the relationship between incumbents and new players. It was a pleasure to have you in this session. Thank you very much, and take care.
Thanks a lot.
You too.
Thank you.
Jean-Louis, thank you very much for a very enlightening discussion. Thanks to the panel as well. Thank you, gentlemen, for a very interesting conversation. And right now, I'm happy to say that we have another actual guest in the studio with us today, and that is a pleasure that I would like to share with you all. Ladies and gentlemen, my next guest is Linas Belunas, and let me introduce him to you. He's a business developer, sales professional, and fintech strategist who strives to make an impact and change the world for the better. Currently, he's part of Flutterwave, where he's leading the company's expansion in Europe. Flutterwave is MasterCard, Greycroft, and Y Combinator-backed payments technology company headquartered in San Francisco. They're changing the way people do business online. Linné, so good to have you. It's nice to see you. This is a saying hello, kind of COVID-free say hello. So how do you like the event so far? Can you kind of share your impressions on what you saw today?
Hey everyone, so thanks for the introduction. I'm really happy to be here. So the event is very strange, I would say. This is the first time I'm this kind of a global conference. So far, what I have listened, I really enjoyed, especially the virtual expo is a really interesting experience, and I'm looking forward to what's next in the event because you have some great lineup here.
So you must listen to the man when he speaks because he knows what he's talking about. So please visit our virtual expo. Don't forget, you can also engage into conversation, do some networking. It's a very good kind of setup in the sense that we are not bound in time, and as the event draws to a close, day one draws to a close, it doesn't mean that necessarily you have to switch off your PC and make sure that you participate and network with as many people as you can. So, Linné, on to the questions that I have for you. And there's quite a list, 47 questions I've got,
okay.
So I think we'll go through all of them.
Let's do it.
All right, so let's give it a go. Well, first of all, you must be probably very excited with the big news for Flutterwave partnering up with Uber to issue the Uber Cash digital wallet feature in Africa. Can you tell us a little bit more about that?
Yeah. So we have actually been with Uber, we have been partnering with them for quite a while. They're a very strong partner and they're actually doing a very good job in Africa, democratizing taxi business, let's call it like that. So Uber Cash, in essence, is an add-on to what they have right now, allows people to seamlessly pay, book rides, buy something on Uber Eats and stuff like that. So what we do is we actually partnered with them to leverage our wide network across Africa, and with the help of that, they could easily top up funds. I mean, their drivers or the users could easily top up their funds and their wallets with very different payment methods, be it card, mobile money, or bank transfer, and seamlessly enjoy Uber experience. So we definitely believe that this should be a game changer for every customer of Uber.
And a more kind of general question overall, do you see, because obviously people kind of tend to talk quite a lot about Africa being the next big thing in fintech or startups, what have you. Can you speak to that a little bit?
Yeah. So actually, one thing I'm pretty surprised about is that when I'm speaking with some big global brands who have not yet found Africa as a continent or as a next business frontier, they tend to ignore that for some reason. They tend to prioritize, China, India, maybe Latin America. But actually, one of the biggest potential, maybe arguably the biggest potential in technology, let's call it like that, is probably in Africa. There's a vast amount of potential over there, be it in resources, be it in customers, and in entrepreneurship as such. So not only myself coming from the country involved in Africa or changing the way people pay in Africa and do business, I do believe as myself as a person that Africa is a next big thing, fintech, especially if we think about the possibilities that 5G will bring and revolutionize banking and fintech as such. So this is something that every business and every business leader should have their eyes on. So Africa.
Absolutely. And just to switch gears a little bit, it's been said right now that you're Lithuania's top fintech influencer with over, what, 82,000 followers? Is that a correct number?
84.
84, there you go. So as we spoke, it grew by 2,000. So that's, I think it's exponential and astronomical. How do you respond to that? How do you get into this position? Can you speak to that?
Yeah. So that's a very good question, to be honest. So on one hand, I would ask, who call it me like that and how they define that. On the other hand, I would be lying, saying that this is not something, that is pleasant to me or that I enjoy. And getting to the second part of the question, in terms of, how I got there. So I wouldn't actually call it something that I have already got there. It's always work in progress, and it's always a journey that I especially enjoy. And but speaking about the actual work or presence on LinkedIn in this case is. I do believe I started off when I first joined Fintech, the actual Fintech, and it was back in late 2015, something that I'm more proud of, or really proud of, in terms of actually adding some value, making connections and doing some business is probably like 2 or 3 years of work or presence or connection. So it wasn't something that happened overnight or something that gave it to me. This was something that accumulated over time.
And that kind of helps me segue onto the next question that I had. So you briefly touched upon that already, but how does being an influencer actually and having such a large following impact your business? What do you suggest to other startups to do in order to build a more significant audience and global awareness on LinkedIn or be it any other platform?
Yeah. So on one hand, it's not something that gives you any privilege, and that network or followers by themselves, it doesn't actually mean a lot. What matters is what are you making out of them. So the connections that you manage to nurture, the relationship that you manage to nurture, and the business that you manage to do with them. So on one hand, it is something that is a privilege to be followed by such a vast amount of people. On the other hand, it's quite a responsibility, to always be, positive, as I would always like to do, to bring value to the people, add some new information, and keep that profile up and running, not only in a professional sense, but also personally. To answer your next part of the question, I would probably look at it from a rather different perspective. So first thing that you should do, whether you're a startup or a business, is actually focus on the product. You should have a top-notch product solving a problem that is big enough for a lot of people, not only your grandmother or your friends and family. Once you have that, you could then focus on social media and bringing some word of mouth to the audience. And the best thing doing that is providing value and first giving and then asking. So as if I would start off with any startup, doesn't matter in which industry, I would definitely not focus on trying to sell and, let's say, eagerly promote my product. I would try to bring some knowledge, some insights on the industry, on the consumer behavior, and then every once in a while to promote the product. But you have to have great product, and then you should focus on promoting it.
Basically, don't just blindly shove the product up people's throats, right?
Exactly.
But rather kind of share a broader context of the industry.
Yeah.
And what about you touched upon that as well a little bit, but what kind of responsibility do you think having such a large following also brings to you?
Yeah. So sometimes, even when you try to be, funny or make some foolish post, let's call it like that, or video, you always you will always get some people's eye who are not either understood the post or they're looking too deep into it, and then it brings some things in question. And before posting or before doing anything, you tend to think a couple of times before doing that and trying to anticipate what feedback or what response it might get. But on the other hand, when you try to speak or share something, it might even change any people's lives. And I had quite a few examples when people just drop me a message on DM saying, thank you for XYZ, I got inspired by Fintech, you brought a smile on my face and stuff like that. So I mean, this allows you to have much wider perspective on a usual basis, as opposed to if you wouldn't have that following or that responsibility. Let's call it like that.
Is there any negative feedback that you'd receive in a DM sort of fashion or in comments?
Yeah, of course. So it happens every once in a while, either in the comments or either in the private messages. But I think it's rather inevitable because the world is so big and it's full of different opinions, and I really value that. So sometimes it's even better if people disagree with you. Then you might find a different angle of how to look into certain topic or certain problem, and it tends to make you think. And this is one of the key things that I enjoy, especially having in discussions when people disagree and when they share their points of view. And that's how we all learn. Not only myself, but also people who are only observing, or those that are only watching from the blind side. Let's go like that.
One of the main objectives of today's event, or this entire week for that matter, is to provide high-quality content for our attendees. What do you do differently to provide high-quality content for your followers? How much time do you dedicate to your research?
Yeah. So again, probably I would ask a question from my side. Different compared to what? But since this is a question for me, I will probably say it like that. So I try always bring my perspective or share anything that is interesting for me. So it could be various topics, it could be various fields and various industries. Of course, fintech and finance per se is at the core, but I try to bring more perspectives and more angles to look into everyday's problems or everyday's topics. Getting back to the second part of the question, I wouldn't call something that I do is required to do any sort of specific research. This is something that I'm working with or living with for quite a few years, so it happens naturally. So anything that I saw, I know reading the Bloomberg's news or Wall Street Journal or stuff like that, and it could spring an idea that end up being a post about, I don't know, Zoom or WeWork or Robinhood or stuff like that. So I don't do any specific research. I just try to follow the flow and state of development of the world and share or bring my perspective along the way.
But in the before you post, obviously, the research that you do, you say you don't specifically research, but obviously you have to have quite a few entry channels for information to verify before you post. Does that kind of hit that on the nail a little bit as well?
That's a very good question. So it happens both ways, and I'm very honest here. So sometimes you simply don't have time, or sometimes you even overlook some topics or details, right? But again, a privilege of having a wide network is that you have a lot of people and a lot of eyeballs, and sometimes they might be even people who are smarter than you, and they tend to share, this is wrong, this is not correct, have you checked that XYZ? So this is like a fact-checked machine, a crowdsourced fact-check machine who provides you with an insight, with an updates and things that you have missed. So next time when you do something related to that, you recall and you double check. But obviously, I try to, if it would be, the stock price or some recent developments, I obviously run this by with a little search from my side, trying to understand whether this is still acute and whether this is still up to date.
Yeah, you must be able to also be kind of responsible for your audience, so long as to get them to crowdsourced fact check you, right? In order to be to stay relevant. We have a question from our viewers online. It's a fun question. What is the most favorite topic in fintech for you?
That's a very good and tough question. It would be really hard to tell. So maybe like a couple of years back or so, payments or neo-banking or digital banks was something that I was really curious and interested about. But right now, as this is getting more and more mainstream, and I see more and more startups emerging in a similar space and trying to reinvent the wheel to some extent, I try to look maybe at some different frontiers, so maybe wealth tech, robo-advisory, and investing in terms of leveraging machine learning and AI is something that is really interesting on a broader level, and I have already briefly touched upon that with with some other questions, maybe 5G and fintech and how this will revolutionize and change the game is something that I'm trying to do more research into this.
Okay, and before we close, one quick other question from my side. If you had the ability to choose a collaboration partner in fintech, what company do you think you'd like to partner with the most?
Right. So again, very good and very difficult question because
yeah, I don't throw softballs today.
Yeah. So in essence, we as Flutterwave and me personally, we are always looking to partner with as much companies, businesses, and use cases as possible. But this will be my personal opinion. So when it comes to Africa and what we're doing with Flutterwave, I would be very keen and interested to partner with the guys or with the startups that are revolutionizing the investment or maybe to some extent small wealth management space to bring more financial literacy and financial inclusiveness into the African continent per se, and then bringing this into Europe, because on a general level, be it in the Baltics or Lithuania, this is something that we very much lack, and financial literacy is crucial in order for have prosperous and very fruitful lives for everyone.
I can see quite a few interesting questions that are being posted online. I think having the pressure of time a little bit, we will try and figure out a way on how they can answer them. But right now, ladies and gentlemen, I would like to say a huge thank you to Linas Belunas, Country Manager Europe at Flutterwave. Applause and little hearts are springing all over the chat window right now, I'm sure, with quite a few individuals being very interested in the conversation that we just had. So as I said, we'll figure out a way of giving you the questions and giving you the platform to answer those. So thank you very much. And I will segue on to what is coming up next. We have a very interesting panel that is due to take place. And the panel is titled, Who Leads Innovation? Banking as a Service or Customer-Facing Fintechs? This is going to be a panel that is both online and live in the studio here today. So the moderator is Mr. Douglas McKenzie. He's a head series producer and host at Fintech Finance. Douglas is the host and producer of the Fintech Show, the Fintech Fix, and the Virtual Arena. Doug travels the world and shoots banks. That's what it says on camera. He has lived and worked in quite a few countries throughout his life, from organizing film shoots in Mexico, running a bar in France, teaching at a university in central China. And while in China, he saw his first fintech flashes, but he is now settled back in the big smoke to report on the UK fintech scene. Ladies and gentlemen, who leads innovation, banking as a service, or customer-facing fintechs?
Okay. Hello all and welcome to our panel where we will be discussing who leads innovation, banking as a service or customer-facing fintechs. And over the last couple of years, and especially in the last few months, global pandemic withstanding, banking as a service companies have gained a larger footprint in the fintech world. And obviously with the introduction of PSD2 and open banking regulations in Europe, there is now the freedom for this innovative API-driven era to thrive, and it's opened up opportunities for countless new players. Now, on the other hand, banking as a service is now not limited to fintechs only. They're now working with bricks and mortar financial institutions too. Now, on top of the digital banks, various lending platforms and digital wallets, how can we mitigate this over-dependency on financial software companies? So, in this relationship, which side dictates the trends? Which side has more power? Now, for this panel, we have some brilliant speakers that are right at the forefront of this changing ecosystem. So I'm going to let them introduce themselves very briefly. And so firstly, I'm going to turn it over to the team who are over in Lithuania to start. Andris, could you kick us off first, please?
Yeah. Could you hear me? So I'm Andrius Bogdanavičius. I have a few interesting roles in Mambu. So first of all, I am heading Lithuanian Technology Center, and also I am having a very interesting challenge leading a global team of platform and service reliability in Mambu.
Absolutely brilliant. And Erica, please.
So hi there. Thank you for having me. I'm Erika Maslauskaitė, Chief Business Development Officer at Inventi. We're the software development provider and SaaS product company for the fintech companies and payment providers based here in Lithuania and in partnership and partnering with the companies from Central Europe and Baltics.
Absolutely brilliant. Thank you very much. And Andy, could I have you, please?
Absolutely. Hi, everyone. Fantastic to be joining you, albeit virtually today. My name's Andy Patton. I'm the Chief Commercial Officer at Contis. My background prior to joining Contis was that I've worked at American Express, MasterCard, and also for a startup accelerator based in Zurich. In terms of the role at Contis, I lead our sales team, our account development team, Lithuanian office in Vilnius, marketing and also client solutions. And Contis itself is an award-winning banking in a box or banking as a service provider, and works with some fantastic partners, including Paysera over in Vilnius.
Brilliant. So, and lastly, Benjamin.
Hello, and it's a pleasure to be joining you all as well. I am Benjamin Ensor. I'm Director of Research at 11FS. We are a consultancy. We believe that digital financial services is only 1% finished, and we're working with our clients to change the fabric of financial services by building the remaining 99%.
Absolutely excellent. And yeah, Andy, as you said, we're obviously, the three of us are joining digitally. It's the first time I've worn a suit in about 2 months, so it's slightly stretched. But I think the best way to start this panel is to kind of look at the kind of preamble, how it started. So if I could, Benjamin, could I direct this question towards you? How has the pandemic and the fact that we've had an ever-increasing amount of digital technology and a digital world, how's that contributed to the growth of the banking as a service industry?
The pandemic has obviously been a human disaster in so many ways. But if you're looking for silver lining in the cloud, one of those silver linings has been how resilient digital technology has been, and how much the industry, not only the financial services industry, but also many other industries, have hugely accelerated in terms of adoption of digital. We've seen so many companies that were skeptical about people working from home suddenly realizing, oh, wow, it works. The technology works. It can be done. So you've seen a couple of things happen. Firstly, you've got executives who've been talking about digital suddenly being paid attention to. People who've been banging the drum for digital for years, suddenly the stuck in the muds are really listening to them. Then, of course, you've got pressure on established companies realizing, wow, we really need to think differently about our operations. We need to think about how we can cut costs, find faster, better ways of doing things. And that is creating a huge appetite to look at things in new ways and look at partnering with other companies, among other things, to build better, faster, cheaper services. And that's driving renewed or increased interest in banking as a service propositions.
Interesting. And Andy, if I could also get your input on that, do you agree?
Yeah, I think Benjamin's hit a lot of the high notes there. I think there's just been some really amazing transformations recently. I read a stat the other day that the average Briton has been cashless for the last 44 days, which, when you think about the structure of the economy, I think that is incredible. We know that there's been more e-commerce. That's been up 168%, no surprise there. But in terms of actual that extent of change, I think that's really been quite remarkable. I think that certain sectors will really see a lot of focus. We're thinking about some of those care-related sectors, supporting the vulnerable and those elements of society where there may be shielding. But I think it goes beyond that. I think that it will go into areas of the economy where they're looking at the ageing population and those sorts of people that require that service. And I think that actually the pandemic will act as as an expediter of a lot of that focus.
Definitely, I can imagine. And I know this has been a challenge for a lot of companies across numerous verticals, retail especially, but it looks like financial services might have come out relatively unscathed. Andris, could I ask you, typically before the pandemic, what were some of the main challenges that financial software companies were facing? And do you think the pandemic has changed that at all?
Yeah, so probably, thanks for the question. It's really interesting perspective, when the pandemic started, and I'm very much relating to what colleague Benjamin has said, is I am now typically asking a question, various executive guys, who are leading the digital transformation in your organization? Is it CIO? Is it CTO? And the most common answer which I get nowadays is COVID-19. So actually, what everybody has been planning many times before the pandemic was like a facilitator of all of those plans to be happen. Because, if we think like a human beings, our needs haven't changed. They haven't drifted away. It's and the services which we need to support our core human needs are still the same. It's maybe the channels and the way is transforming now. And as some people have said, it's probably might stay or be a new normal.
Interesting. And Erica, could I also get your input on that?
Yeah, indeed. Actually, I was referring to the meme that shifted over the internet. In terms of the who leaded the digital transformation, and of course COVID-19. And for us as business stakeholders and executives, it's a really crucial part to take a lead and actually enable our partners and clients and end-to-end customer to find the way how to use this financial disruption to get whether the financial support that they need in these challenging times, right? So for the fintechs, of course, the way of working, since the fintechs were always filling a gap for alternative payments, for better customer experience, for better UI, for tracking and analyzing the data, right? How do you use, what is your consumption of the things that you're buying online? So now it's shifted rapidly. And for us, I think in supporting the fintech industry, it's a really challenging thing to onboard the customer at the moment, since again, like the user base, in most of the cases, fintechs were targeting the youngsters, so to say, the younger audience. These days, when everyone is trying to secure the social distancing, many elderly people are in need of getting their purchases done. So, of course, for the banks and for the fintech companies, there is a need to reach to those kind of customers. And of course, tech engineering part, which was, as we know, banks like big corporate organizations, and they're struggling to being fast and effective, right? So for now, there is no time actually, to find the key stakeholder, the key vendor to shift their business really rapidly, and they need the trustful partners, tech partners, to enable that digital presence really fast in terms of their business.
Interesting. And Erica, if I could actually follow up from that, do you think that this is going to, obviously we've just talked about how it's had a cultural shift and certainly a technological shift as people are more accepting of digital. And do you think this is going to change regulatory culture when it comes to maybe changing KYC or anything like that?
I'm more than sure, basically, from the news that are now evolving and now being on top of the news section. So we see that most of the regulatory institutions, they're trying to find ways how to enable governments just to launch, let's say, the open banking solutions present in the countries, and at least 50% of the G20 countries are willing to enable open banking this year already. So I think that's a huge shift for the regulation in general. And in Venti, we're supporting the fintechs here in Lithuania who are trying to obtain the specialized bank license or the EMI's license with the Central Bank of Lithuania. So we see the huge demand that they're trying to speed up the process for getting the license, and these software as a service products might enable the better and the faster shift for their business.
Interesting. Oh, brilliant. And I've got to ask, actually, now that we're having this, everyone's kind of segmented in their own homes, and it's kind of hard to build up those kind of friendships or partnerships and collaborations, which has become such a recent trend in this industry. Andy, could I get your viewpoint on this? Because I think your insight would be really interesting. What new collaborations and partnerships will be formed, and how will they be formed in the light of this upcoming economic crisis?
Sure. I think that partnerships can be difficult. There was some research recently put out by EFMA and Capgemini, whereby they said that 50% of fintechs didn't necessarily feel that they were in the right partnership. And I think that part of that is around the different cultures that exist maybe between a large company and a small company, differing focuses on agility and different focuses on maybe reputation and regulatory aspects, as an example. But I think what's happening at the moment, and what will really come out of the pandemic, is that the absolute sort of necessity for some of those innovations and for some of those partnerships to succeed, and also the impetus for speed. For example, at Contis, we developed, alongside Visa, a solution which was targeted at the National Health Service in the UK, being able to give carers who were buying products on behalf of those people who were shielding the vulnerable, to be able to do that safely. And I think that the sort of partnerships that we'll see, I alluded to it a little bit earlier on, will be around definitely that carer offering. I think that there'll be some really great examples of partnerships around that, and we're already seeing some ourselves as Contis. And I think also partnerships around liquidity, lending platforms, getting money into the hands of those businesses who are maybe coming out of furlough processes, or processes maybe where government, central or local, have supported them. So I think they're two key areas that will really see a lot of partnership-orientated activity. And I think that because of the pandemic, that actually the impetus to make a success of those partnerships will be even stronger.
Excellent. And Andres, as Mambu, I really like your input when it comes to collaborating. Can you give me a bit more input on that as well, in terms of how are these new kind of collaborations going to exist in this post-corona world?
Yeah, sure. I very much agree with what Andy has said on the topic. In our business is actually where we really trying to help traditional banking to be successful in digitalizing their offerings. We actually see a lot of potential. First of all, we see that traditional banks, they are built to last, not to change. Therefore, they are very much facing the challenge with the speed of change, the speed of provisioning new infrastructures, the speed of handling their vendors, so they can implement some new functionalities for their customers. And the second, what is very important, they are looking for the flexibilities, especially in this pandemic situation, where they need to start transforming their offerings to a fully digital space. And those flexibilities, those are incapability to be very flexible to utilize the capabilities of the ecosystem, or choose a best-in-class solution which is provided in the ecosystem and integrated to the existing infrastructure. This is where actually banking as a service solution like Mambu chips in very well. So if you think that, you know, in the traditional banking, in order to implement some of the changes, deliver some new functionality, it usually takes months. So in banking as a service, some functionalities can be delivered in weeks or sometimes even days.
Really interesting, excellent. And so, I mean, kind of following on to that new development of tech, I mean, and new products. When it comes to this new development, do you think it's been supply or demand driven? Benjamin, could I get your info on that, please?
Yeah, it's a great question. In a sense, it's both, because what really drives innovation is companies looking for new ways to create value for their customers. And so you have the companies, the brands, if you like, that own the customers or have the customer relationships, looking for new things that they can do. And then they're looking for partners who can enable things, who can help them do things faster. At the same time, you've got the capability providers, the software providers and so on, developing new, better ways of doing things. So in a sense, it's both the demand side and the supply side. It's when they come together that the magic really happens, because often innovation comes from the combination of existing capabilities, combining two things into one. So it's a bit hard to say it's one or the other, because it's actually both. It's the collaboration that creates the innovation often.
Interesting. And speaking of that collaboration, Erica, I know you're speaking, because obviously Lithuania, I know Inventi actually helped Revolut gain their banking license over there. And I was wondering, how much power do customer-facing fintechs like Revolut have over the creation of this new product capabilities?
So yeah, thank you for the question. You know, over a year now, we are collaborating with the Revolut Bank. So we successfully implemented the regulatory connector for them, so that they would comply with the specialized bank license. You know, implemented the integration with the tax authority organization. And the main thing and the main goal of theirs, why they chose the local vendor to implement the solution. So first thing, we had the defined software as a service product, which has the streamlined functionality and the time to market, the delivery time that they actually needed to comply with the regulation and with different stakeholders that were involved. So we're really happy having Revolut on board. For us as a small company, locally based here, it's a really big trust from the unicorn, fintech unicorn, who is actually shifting and disrupting the finance industry whatsoever. So also I can mention out of the partnership, since we've mentioned those. So we are really happy to work with Mambu as well, and with the Mambu customers. So we were helping them also to enable the regulatory connectors if they're having and considering Mambu as a core banking platform.
Okay. And Andy, I've also got to ask, how much power do you think the customer-facing fintechs actually have? Or do you think it is actually driven from the banking-as-a-service companies?
Yeah, I mean, it's definitely a mix of both. When we think about the client-facing fintech, they're maniacally focused on solving a problem. They've got a very clear view of what that problem is that they're trying to solve. They're obviously, in many cases, very, very strongly focused on the UX that goes around the delivery of that, around the acquisition of similar customers that fall within that segment and sector. But when we think about the B2B providers, we have that perspective of looking across segments and sectors, which enables us to bring different lenses to the way that we can innovate. We also have strong visibility on the regulation and the trends and aspects that are coming in there. And I think that the mix of both of those is really where you get that sort of powerful, hugely potentially transformative partnership. And that's really what is exciting, I think, for everybody on this panel, is how you can bring the best of both worlds together, how you can provide a great platform for that fintech that's trying to innovate, great uptime, real-time, next-generation products around it, in innovations from the B2B provider, and equally facilitate those great innovations and those great transformations and disruptions that the fintech is seeking to do as well. So for me, again, it goes back to how do we really make successful partnerships in this space, cement them, make sure that they're working, and do away with those stats where 50% of people feel that the partnership isn't optimal. So if we can really get that firing on all cylinders, then that's when the end customer will really benefit.
Excellent. And speaking of that end customer, ultimately, they're the ones that need to be serviced with the newest technology. But do you think, Andy, that this is an industry which has been driven by consumer demand, or do you think it's research and development teams just coming up with all these new ideas that no one knew that they needed or wanted, and then just putting them in place?
No, I mean, I think that innovation is a change that can make money, is one of the definitions I've heard of the word. So, for me, coming up with change for its own sake and foisting it on a market, through an R&D department, I think we see less and less and less of that, to be honest. There were some stats that were published recently by the World Bank that there's 8 million underserved consumers in the UK and something like 24 million businesses across Europe who are underserved. So there's a door that's ajar there. There's a door that's open. There's a door that is ready for disruption, for people to come in with solutions and help improve the offering. And that isn't going to come around by people sitting in an ivory tower and sort of pontificating about what's going to work. It's about customer insights, customer research, being close to your end customers, working hand in glove with the regulators, working closely with the fintechs, and really looking to see about how and where you can transform and disrupt the market. And one of the sectors that we're focused on is at Contis is insurance, for example. And we believe there's a lot of friction in the insurance space in terms of payments. And we think that there's some great areas that we could work together with the insurance companies for the benefit of the end consumer, be it around payment disbursements for claims and a whole host of other areas. So again, I think that increasingly, the innovations have to be relevant and can't be, conjured up in isolation of the market realities.
Sure. And kind of following on from that, Andris, could I get your perspective on this? As obviously in Lithuania, you've got a very young tech savvy population, and that's got to help massively with, for instance, R&D, but also demand. What have you seen in Lithuania when it comes to the public's interest into getting these new financial products?
Yeah. Thanks for the question. So, yeah, it's kind of an interesting perspective. Let it put it for a little bit away of the way we do the business in Mambu. Actually, what we do, we observe how tech-driven companies are working, like, I don't know, Airbnb, Uber, and similar companies. What they actually do, they innovate a lot, they try a lot, they leverage ecosystems. And actually, this is what we are trying to do and bring into the banking as a service business as well. So we are not facing the end customers, but what we do, we are enabling the financial organizations to serve their customers. And this is what our composable banking concept is all about. So it's about enabling the financial institutions to be ready and flexible for change, to do it in a fast manner, so they are adopting the customer needs very fast. Nobody knows how the user experience will look like in a year or two. So what we need to do in defining our businesses, we need to be settled for the right architectures, right APIs, which you can compose in an offering which customers' needs, in particular at that point in time. And actually, this was one of the reasons why why Mambu has decided to bring their footprint into Lithuania to utilize this young, tech-savvy communities and knowledge which is here, so we can bring more and more of this innovation, more and more of tech-driven mindset to the banking business.
Interesting, brilliant. And we've discussed over the course of the panel the difference really between direct-to-consumer fintechs compared to B2B fintech players. But what I'm really interested in is how will that relationship change going into the future if the B2B ones are just providing all the services. So, I mean, Benjamin, could I please get your view on where do you think this ecosystem will go in the future?
Thank you, Doug. That's a great question. I think what we've seen a lot over the last few years and what we'll continue to see is quite a few of the direct-to-consumer fintechs pivoting to a business-to-business model, because it's really tough getting a consumer proposition or a small business proposition or even a large business proposition to market. Europe remains fairly fragmented, even if you're hugely successful in Poland. Equally successful in Czechia or Hungary or whatever is not easy. So many of the European direct-to-consumer startups are struggling to scale beyond one country. There are some wonderful exceptions like N26 and Revolut, but it's tough. So I think you'll see more of those businesses pivoting, particularly where they've got a really strong technology platform or they've got capabilities that they can give to others. At the same time, you're going to see digital giants coming in. We're already seeing companies like Uber, like Apple and so on playing a bigger role in financial services precisely because of banking as a service. Banking as a service companies are making it easier for an Amazon or whoever to start offering services direct to consumers. If you look at small business, it's happening even faster as accounting platforms like Sage or Xero and so on start integrating huge numbers of capabilities from other companies and building whole ecosystems. So I think you're likely to see a lot of the consumer-focused and some of the small business-focused fintechs shifting their business model, pivoting because they're finding it too hard to win business. So you're going to see a growing number of B2B ones. Some of those will get acquired by existing businesses. So let's say someone like a Mambu is going to pick up a few other businesses that they see where there's great technology, great people, hasn't really got the scale. We're going to see a lot of consolidation on the business-to-business financial software side as companies pick up smaller firms that are great tech, great people, but maybe struggling on the marketing side, struggling to really break through. So I think you'll see a lot of pivoting, a lot of consolidation over the next few years.
Interesting, very interesting. Well, thank you for that insight into the future. And I think that's all we've really got time for the original set of questions, and time to take a Q&A look. I've been getting a few throughout the panel. Unless anyone else has something they want to jump in on at the end of that in terms of the future of this ecosystem. No, okay, perfect. Right, well, so I've got a number of questions here. Do you think, with all this platformification and the barriers to entry being so much smaller, that they're going to give way to a much more niche set of services? Will people end up having their main bank and their bank on the side? Would anyone like to jump in on that? And I'm not afraid to...
I can start basically. I think, the status quo today, what we have now, we have like several cards and several banks and probably several fintech companies that we have already on board. So I think that this platformification, as they call it, is probably shifting towards like one marketplace, where you can buy everything, like buy and obtain different kinds of services on one platform. WeChat is one of the examples that's already like for years now in Asia, right? So Amazon jumping on board, whether Facebook jumping on board with Libra and the other examples, I think that's a way forward. And of course, niche, that's the gap where fintechs might actually fill in. And as we saw during this pandemics, right, like many fintechs would help and jump on board while helping to support the small SMEs and different businesses with the federal aid. And this was one of the examples how maybe banks were too slowly and fintechs jumped like on board. So I think that diversification and as diverse market we have, that helps to serve the right customer needs or the business needs.
Yeah.
Very interesting. And Andy, sorry, did you want to jump in there?
Yeah, just to add a couple of points to that. I think that obviously open banking is predicated on this very thing. It's how we can share data for the end consumer's benefit by enabling different products and services to be developed. But I think in terms of that true platformification, though, a lot of it will come down to the ability of us to port our identity, our digital identity between different entities as well. And I know there's been a lot of work done around that, some more successful than others. But in terms of that area, I think that will be really interesting. And there was a piece of work done by an investment company from the west coast of America called Andreessen Horowitz recently that said all companies will become fintechs. I think that might be a little bit of a stretch and an overstatement, but you do see with whether it's Uber, Airbnb, some of the mobile phone operators, some of the insurance companies that we work with, that wish to develop financial ecosystems, payment ecosystems. And I think that if we can get that identity aspect right and a safe porting of that identity between different companies, I think that that will aid that increase in developments of ecosystems.
Excellent. And that leads me actually onto my next question. If effectively every company is going to be a fintech company, does that ultimately mean that banking the unbanked will just become irrelevant because everyone will have to be connected to a bank in some way to use applications? How do you see fintechs leading innovation here in helping people finally becoming banked? Andrew, could I get your Benjamin? Sorry.
Yeah. So, yeah, I can tell. So my perspective, it's very simple here. What we can already observe is that many tech-driven companies already driving the user behavior another way. Already today we have many services and companies delivering everything on the mobile phone, let's say. We don't know how the experience will change further, but what we for sure know that the user demand due to those facts which technology-driven company is giving to us and the way how we can enjoy other services suggest that banking services should adopt as well. And if the traditional banking, if the old school banking will not be able to adopt or stay on par with these tech-driven companies, definitely they will not stay for a long time, right? So fintechs are here and definitely here to stay.
Yeah, I can imagine. And Benjamin, sorry, I didn't mean to cut you off.
No, we spoke at the same time. I was just going to say, we've seen distribution costs falling massively over the past couple of decades. And as a result of that, millions and millions of people around the world have been brought into payment systems for the first time. That's going to continue to increase. But what's also happening is the ability to deliver better and better outcomes to customers through better customer experiences is continuing to increase as companies develop better technologies, better solutions. I don't actually believe that every company will become a fintech, but what we will see is financial services being embedded into more and more things, so that as we as consumers or businesses pursue particular outcomes, we have problems in our lives, companies are going to come up with creative, imaginative solutions that often involve payments or lending or deposits that enable us to do things more easily. So what we're going to see is financial services becoming embedded into more and more other services, so that we have to think about it less, so it becomes easier for us. Andy made a great point about insurance companies. You know, insurance companies are really trying to think hard about what's the asset that someone's trying to insure. They're trying to look after their home. They're trying to look after their car. So we can see all sorts of other companies like utilities and telcos and so on partnering with insurance companies to make it easier for us as consumers to manage that asset. So what's interesting is if you're a traditionally minded bank or insurance company or wealth manager, you just don't see this change in mindset as leading companies think about the ultimate customer outcome and build new services around that. So there's a huge shift coming, and some people understand it because they're close to customers and thinking about customers, and some people are carrying on in the same old way and they don't quite see what's happening.
Interesting. And I mean, with that, going back to almost the first question from the audience, and you brought it up slightly, Benjamin, talking about the tech providers. Do you think we're going to see them make more overt movements into financial services, or do you think they're pretty much, for instance, with the Google card and the Apple card, that's as far as they're going to go? Andy, could I get your view on that, please?
Yeah, it's going to be really interesting to watch, isn't it? As you say, we've seen some steps. I think, given the customer data and therefore the insights that they have around their customers, I think they've been relatively modest steps thus far. And I wonder whether customers would feel that maybe it would be a step too far for some of those companies that have a huge amount of data about them to take on the mantle of being their provider of financial services in terms of their banking needs. The flip side of that, of course, is that they could do, a fantastic job driven by insights in terms of the products and services that would likely interest that individual based on the huge amount of insight that they have around the individual. But I think I just watched that one with a bit of interest to see how far an Amazon or a Google, Facebook, etc., might take that, and what the consumer receptiveness might be to that.
Interesting. And we've got. Oh yes.
I think they'll take it as far as they can. I think this is going to come down to a battle between the European Union regulators and the big tech giants. If you look at China, you look at what Alipay is, you look at WeBank and so on, they will keep adding more and more and more. Look at Goldman Sachs partnering with Apple. Goldman Sachs has got nothing to lose in the existing infrastructure. They're not an established bank, not an established retail bank. They will power Apple as far as Apple wants to go. I think we're going to see a lot of digital giants pushing hard into financial services, and that's going to be a huge threat to established financial services companies.
Well, that will be a really interesting change in the industry, and kind of. I've got another crystal ball question from the audience, and Eric, if I could point that your way, what do you think will be the most outstanding change in the financial industry from a customer's point of view in the next 5 years? As a hard one.
I think that's a tough question, having in mind that a half a year ago, we wouldn't think that COVID might happen at all and would change dramatically and shift dramatically the industry that not only impacts the finance, but the general humanity. So I think the main thing that we might face is actually user identification, the user onboarding process. So having these cross platforms and different stakeholders and players on board, it's a really challenging thing to build a trust with the customer so that he would get the service using and so that he would verify himself. So I think the customer's ID thing, that's a new thing that would shift not only financial industry, but all of the industries as follows, which are dedicated to our identification in general. And like all of the fintech and tech companies are facing the challenge right at the moment, and many providers are having many different types of data that they try to, with the empowerment of the AI, try to modify and analyze. However, I think the main challenge is how do you build the trust with the customer so that he would have the right path to onboard to the service he might use.
Interesting. And Andreas, do you think, do you agree that it's going to be mainly a KYC issue going forward with all that data that all these companies will now have?
You know, in some previous questions I have already mentioned, you know, the 5 years period is something very big in tech world, you know, given the fact like everything is moving so rapidly, it's so hard to predict. And I think it would be a good wrap up for our discussion if we can tell that, you know, the only thing which we are sure about that it will change, and what we have to take into the consideration is to prepare for those changes, which are definitely coming, which means we need to have flexible architectures so we can compose our future, whatever it comes.
Yeah, I mean, the only constant is change. And speaking about the, we've got, you know, just a time for one more quick one, I think. The change in data and identification. Benjamin, you brought it up earlier, that the WeChats and over in China, that significant amount of data that they can pull on their customers is so much more colorful than maybe in Europe and America. Does that mean that, for instance, we're going to see in China and Hong Kong far more interesting financial services and products being created than the rest of the world in the next 5 years?
Not necessarily. I think there's so much we can learn from China, but there's a big difference in terms of the sort of information standards and privacy rights and so on, that it's a little bit of lessons for Europe from China, because there just aren't the same kind of protections that we have here. I do think we'll see a lot of innovation coming out of China. I think the Chinese companies have been hugely innovative. There's a vast amount to learn, but I'm not sure that we're going to follow the same path in Europe. That didn't quite answer your question. Sorry, I missed the question.
No, so the question was just with the sheer amount of colourful data that the Chinese government and Chinese fintech companies have, do you think there's a chance that Europe and America and Africa can never catch up when it comes to creating these brilliant new financial products that they might be able to create?
No, I think we can catch up.
Excellent. All right, guys. Well, I think that's all we have time for on the panel. Thank you very much for attending with me, and it was really insightful for me. And I'd like to say thank you to our audience and the questions, especially the tough one for the next 5 years. But thank you very much. And to the panel, I mean, I don't suppose, have you got any other inputs for the for any question that I might have skated over?
No, I don't believe so.
Okay, excellent. Okay, brilliant. Well, thank you very much for being on the panel with me, and I look forward to hopefully meeting you all outside of the virtual digital world that we live in.
Yeah, thank you, Doug.
Thank you.
Great. Thank you very much.
Thank you.
Thank you.
Bye.
Thank you very much to Douglas and the panel for a very interesting discussion. It's been a pleasure listening to them, especially to the questions that were to do with predicting the future a little bit. Right now, we are going to segue on to another panel discussion. Artificial intelligence implementations on blockchain, use cases and future applications. The chair of the panel, George Papageorgiou, who is one of the creators of the first MSc in blockchain technology globally in 2014 for the University of Nicosia, and developed the first Bitcoin-based academic degree accreditation system. He currently researches governance through Bitcoin technology. He has consulted several companies, central banks, universities, and global conglomerates on understanding and implementing the technology. The panel, Artificial Intelligence Implementations on Blockchain, Use Cases, and Future Applications.
everyone, and thank you very much for the introduction. It's a great pleasure to be here among two very distinguished researchers in the area of artificial intelligence and blockchain. And I think we'll have a very interesting discussion today, especially because these two topics, we see them on the news, we read about them in literature, but it's not very often that we come onto a bridge that puts these two topics to work together. So we have Ian and Kostas here today with us to discuss their latest work and what are the implications for both the artificial intelligence and machine learning fields, but also blockchain. So Kostas, could you tell us a little bit more about the paper that you've written? What has it proven and what does it show?
Okay, it's about artificial intelligence, for lack of a better term, because of the fact, it is not really intelligence. It is, in fact, programming that does computational job, and that term is not very accurate, in my humble opinion. So we have a set of programs that we call AIs, AI agents, to be more specific, that we can load up onto the blockchain and basically do machine learning with the data that is stored on the blockchain. Because of the fact that artificial intelligence is very, very accurate at what it is being programmed to do, it is very easy to be weaponized. So imagine that all of the accomplishments that we have in the field of data learning and data science and AI so far, it is controlled by very few players. Among them, most of them, I think, IBM, Google, Facebook, Amazon, and so forth. Every big company out there owns one of them. So the thing is that having such a powerful machine working for one entity, whether that would be a country, an individual, or a company, is a very, very big burden for everybody else. So I'm not talking about specific AI agents, but for the total lot of them when they exist in synergy. Because what we're talking about in our paper is basically the notion of AGI, on how we can produce an artificial general intelligence, which basically is a set of AI agents that work in synergy in order to produce computational results that vary in various topics. So you don't have really one AI agent to predict the weather for you. You have an AI agent that can drive you from one place to another, check the weather, check the traffic, and so forth. So if you extrapolate this into the fields of medicine, into the fields of military, then it will be very, very easy to be weaponized. Another topic that we touch in that paper is how you can ensure that the data will be correct. That means that we will store true data within the blockchain, which is a topic we will be discussing today. How we incentivize the user by using the blockchain to store data inside that it is actually true, because that's the essence of it. If you have a true data set, we now have very, very big data within the internet. And the big burden is that we need to clarify which is lie and which is true. Within the blockchain, storing data on the blockchain will be something that you will be needing to pay for. That means that you will need to spend some tokens. So while you will be doing that, you are spending money. So you cannot really post lies or false information. Another great fact is also that we will be having the true auditing machine. And basically, it's about all this and what can we do with that.
All right, that's a lot of things in one question. So let's start to drill a bit deeper into each individual point and try to see how this could benefit either the blockchain ecosystem or the world at large. So let's start with a very basic question, Kostas. Why should we put an artificial intelligence entity on the blockchain? What are the benefits that we can reap from that, as from a business perspective and from a user perspective and from a more public perspective?
Okay, say that you have a very powerful AI that is controlled by one entity, by one company. That would put you in the very difficult position that you will have to entrust your private data to that company, and you need to get their permission. If that AI agent or AGI is stored inside the blockchain, then it will be directly accessible by everybody, everywhere in the world, as long as they have some tokens to spend, of course. In the long run, this has many consequences. That means that in the long run, what we are actually seeing is that the power of tokenization shifts from what we call cryptocurrency right now to information and value. So that's another very big topic that we could discuss today. Another very, very important aspect is data encryption, because you can share your personal data, whether that would be medical exams or whatever, that would be used in order to perform deep learning inside the blockchain. You can encrypt your data within your own key, with your own key, and nobody else will have the permission to look at it or direct those data to their owner. That means that you will have the best privacy you could have in order to get your data inside an AI deep learning process.
Great, that's great.
That's about it.
Yeah. Ian, your take on this aspect of the neutrality of an artificial intelligence on the blockchain, and how could you see that we would avoid the weaponization of these artificial intelligence against the users or against the data providers, essentially? What's your take on this?
Sure, yes. It should be obvious that any large corporation that's running a very large AI setup is going to outcompete anything on the blockchain. So we can't compete, if you like, using raw power, but we can compete using the quality of the data. The notion here is that if we can improve the quality of the data on the blockchain, then you can get to a point where people working with poor sets of data, which are, for example, internal opinions, internal data sets, and so forth, are actually working from a much worse source. They're basically feeding garbage into their AI, and therefore they're not getting the results that they could do. If we can improve the data on the blockchain by attaching, for example, identity information, dispute resolution provisions, payment provisions, as Kostas mentioned, and various other mechanisms, then we can get to the point where the blockchain data itself becomes the source of truth. If it's not on the blockchain, it's not actually useful, it's not actually relevant because it's not up to standard. We might as well work with the key data that's there. The second thing that happens is that if we manage to reach the fulfillment of this dream, we manage to build the AI onto the blockchain, it can prefer the data that's on the blockchain, and simply put, it can produce outputs which are, if you like, certified by the blockchain. So not only is the data, the starting position, now certified by information on the blockchain using normal Oracle processors and identity and so forth, the processing is also certified. The output that comes out is certified as to be the best of breed. And in this way, we approach approach the problem as a quality issue. If people are going to rely on data being produced by a large AI, then they've got a choice. They can go to a competitive big player that's able to marshal lots of processing resource, or they can go to the free, fair, open access blockchain and get a certified result. And this feeds into their own personal risk assessment.
So from what you're describing, it harkens back to some of the discussions that we've had in the early blockchain space about 10 years ago, where we discussed that an open ledger-based payment system would probably be better and more cost-effective than most existing payment systems, and even before that, to the structure and the nature of the internet itself, where an open interconnected platform for communication would be better than individual siloed intranets. So in this sense, do you see this as a rational continuation of the same discussion that started 30 years ago, essentially?
Oh, it definitely is. But it's very difficult to predict how it will pan out. I mean, we all, people in favor of blockchain money, Bitcoin and so forth, were very definitely proposing that Bitcoin would be a payment system. Now we fast forward 10 years since the beginning and all those debates have been had, and what we've got is, yes, we have the ability to do payments, but the monetary value is the value of the coin is very volatile. So we're halfway there. We're not all the way there. What we've got is a hybrid mechanism from what we predicted. So how this will work out in the future is very, very difficult to determine without actually trying it at scale and seeing what actually bites us.
Absolutely. We'll touch upon this a little bit later down the discussion, but as you say, to manage to create a vibrant ecosystem that's self-reinforcing as a mechanism, it needs to have the appropriate incentives. And those would be incentives from users to be able to participate, incentives towards business, they want profit, and incentives towards governments or anyone else who is regulating or looking over these activities. So let's start from Ian on this. What's your take? Do we have the right incentives in place, or do we need to structure other systems to make sure that they exist?
Well, some of the experiments that are being done are getting towards that area. If you set up, for example, an open market for, say, weather data, then you allow people to download this data once it's on the blockchain. And those people who need it can also pay for it a little bit. We're talking micropayments, very small amounts of money. But slowly we get to the point where a large section, or if you like, a narrow but large section of data starts to pour onto the blockchain on a daily and minutely basis. And then that becomes reliable in the sense that as time goes on, that's the go-to place to get that data. So from an individual perspective, you want to get paid for putting that data up, and you want to pay to be able to use that data in some sort of reliable fashion, which is something where we need to do small baby steps in order to build up that marketplace, because at the moment, of course, you're competing with the open web for a lot of very low quality data. You need to move to the point where you're dealing with higher quality data, which is going to require a certain degree of institutionalization and economy and various things emerging.
I see. That makes perfect sense. So, Kostas, from your perspective, in a blockchain ecosystem where we have competing artificial intelligences fighting for supremacy among each other or specializing on different tasks, how do you see the incentive structures shaping around there? Would they fight with them between them for resources? Would they market themselves? How do you see this playing out?
Okay, basically we're talking about a biological representation system. So these systems are very, very well studied up to now. It's the definition of a Moran process, which is essentially when you have two or more mutants that fight with each other, only one survives and finally prevails over the others. In my opinion, competition within those AI agents will provide with more power the end users. We already saw that in data science with GANs, generative adversarial networks, which basically they are two neural networks that are competing with each other so that they have the ability to produce the best result. So, in my opinion, it's not about the AI agent construction, but all about the data that is being stored inside the blockchain. So if you have many blockchains and the same neural networks, then the blockchain which has the most legit data will be the one that will be stronger in the long term. You need to imagine this like a compression of a very big amount of data. By running that data through the convolutional neural network or the RNN or whatever, you basically compress that knowledge. You compress that knowledge, and the framework then knows how to tell what that knowledge is and be able to produce computational results. So it's all about the quality of data, not about the construction of the neural net.
Great. I think that's clear enough by now. But what I wanted to explore a little bit further on is the source of this data is probably going to be everyday people, like the activities, the movements, the financial transactions, the habits, all the behavior translated into economic value, essentially. And the model we've faced so far from Google and Facebook and the other services is that we provide you a free service so that we can take this data from you for free, essentially. And we know that there's multiple challenges with this. So I'd like us to explore this aspect of the equation a little bit, so, namely privacy, and if there's hope that with the new methodologies and blockchain, we can essentially give some privacy back to the users, essentially. So let's start to dive a little bit on this. Kostas, you can start if you want.
Okay, so I strongly disagree with the current model of utilizing the so-called free information from all the big companies. Basically, there's an aphorism about it, and I will repeat it because I find it very, very accurate. When you don't pay for something, you are the product. So you need to digest this in order to understand why it is important for the quality of the data that is being provided and that you have the ability to dive into and ask information about it. You need to pay a little amount for that. We're not talking about big money here. I want this to be very clear, but we are talking about quality information. Right now, you can see that what we do have is a very large amount of data that make no sense. You cannot really utilize the data from Twitter, let's say. I'm sure that you have read into the newspapers about the AI that has been using the data from Twitter posts, and it became racist or Nazist or whatever. So the thing is that if you think about it in the long run, what you actually not paying is your ability to keep reading all this false information, all this garbage, let's say. It's garbage in, garbage out, like Ian said a little bit earlier. So we need to imagine what will happen in the next phase of information technology. And I very much think that blockchain is the perfect ground to build this up. I would define it as the future internet. We like to call it metanet right now, from meta, which is after, and net from the internet. Of course, this cannot be achieved, very easily. You need great infrastructure. It can only exist within the infrastructure of data centers. It's not easy, but the idea is already there. It's already out there.
Great. Ian, would you want to dive a little bit on the challenges that we're facing around privacy and new ways to manage this information?
Sure, indeed. There's two aspects here which are going to come to the forefront over time, I think. The first is that the data that we put onto the blockchain is generally public in the default condition. However, there are a bunch of emerging encryption techniques that we can use to hide that data in plain sight, if you like. One of these is differential privacy, another is homomorphic encryption. There's an array of things that we can do here, but what they essentially allow us to do is to put in place the data on the blockchain that we would want to use and have them accessible under various conditions, including commercial conditions, such that other companies could get involved in using them, etc., etc. The most exciting of those is homomorphic encryption, where we can put the data into an agent on the blockchain and then have the processing also be done by that same agent or an agent next door to it, such that the processing occurs transparently, but we cannot see the actual workings of that processing. So we can have the situation where we have, if you like, opaque or black boxed objects on the blockchain which do their work. They hide their data. We can contribute new data to them. We can ask questions of them, but what's happening inside is completely invisible to us in theory. So this is one way forward. The second thing that we have to kind of get away from the technical aspects of this is that the privacy problem really is a social problem. The technology cannot do very much in the situation of society today when you've got, for example, large corporations that can aggregate a lot of data, which they will be able to do on the blockchain, and then sell that data for some standard revenue stream. Even if they start out doing this with the best of intentions and a nice contract and a loyal user base, we've seen in the past every one of these companies then sits on the top of the slippery slope. It starts to make a few changes, and eventually it's sliding all the way down to abusing the data and abusing its users until it gets taken over by a newcomer or something like that. We've seen this so many times in the past that it's pretty much a law. The only way around this that I know of is to move away from the notion of pure commerciality, the notion of capitalist-style corporations managing and controlling the data, and instead move to a situation of cooperative groups such that we all sit together and we start a cooperative simply for the purpose of managing our data or some other task as well, perhaps. And inside the cooperative, we agree that we will benefit from that, at which point we are no longer we are no longer a misaligned group of stakeholders. We're no longer beholden. We're no longer losing out our profits to some random bunch of shareholders. We are the shareholders, and therefore we are entirely responsible for the entire cycle of the data as it goes onto the blockchain, as it comes out of the blockchain, and we get all the profits as well. So we can individually, as groups, set the dial as to where we want the privacy to be and where we want the profits to be, which is something you cannot do with the standard shareholder corporate mechanism. So I think that's what's going to happen. You can kind of see a vision of that with, for example, mining pools. Fairly fairly soon, fairly early on in the process of mining, it became clear that it had to break up and turn into a different fashion. People would employ their own mining hardware, but it was too hard to work out the entire process, so they aggregated that mining into specialist pools. Now, if you took those pools and you called them cooperatives, you would have exactly the mechanism needed to be able to preserve privacy on the blockchain.
All right. A follow-up question to that, which is said by something you instigated. So we know that in cryptography and in the blockchain space that most secure algorithms or cryptographic functions have a certain expiry date. So it's not about when they will be broken. It's not about if. It's about when, essentially, they will be broken. So, does this to you imply a sense of a different form of freedom of information regarding the data that is stored on the blockchain, regarding the past and the history of our civilization as we move into the next 50 years? Some of these will be expected to change and update, but I assume that the whole past at some point will become transparent, whether that's personal privacy or corporate privacy or more generalized. Do you have any thoughts on that?
Yes, many. Cryptographic algorithms are they're odd beasts. They're not particularly reliable in the sense of being able to predict what happens. Generally, within the domain, and especially with certain classes of algorithms such as hashes, we can be very, very sure as to how long they're going to last. Most hashes are still good today, even some of the ones that are being deprecated, because they're losing a particular function. But when you get to more exotic algorithms, and especially we start to talk about things like quantum encryption, quantum cryptography, the homomorphic encryption, and so forth, all of these are, if you like, brittle in the sense that we're waiting, we're praying that there isn't a serious break in their concept from the cryptographers. And the second problem that occurs with these is that the more complex they get, the harder they are to implement. So although we can kind of generally predict when a certain algorithm runs past its use date, we have the wild card that's sitting there that says, at some point it could just collapse completely. And for any individual user, for any individual system, they can make a mistake in implementation, they can muck up their keys, they can do any number of 100 things, and suddenly it's all available there in the open. So it's very difficult to come up with a conclusion that cryptography is reliably going to open up the history of the world in 30 years, which is something we saw with, for example, the NSA. They added elliptic curve cryptography to their Suite B list of acceptable algorithms. And then quantum cryptography, quantum came along and said, well, actually, we might be able to break this. The question then arises, can we break it in, say, 30 years? And the answer is, we don't know. So the NSA had to back away and say, okay, let's go back to adding in the old algorithms so that at least we have a choice. We don't know what the answer is, but we now need to be double safe.
Exactly. So my take on this, if I might jump in just for a second, is that while in all of human history we have a past that has the tendency to get deleted, essentially. History likes to forget things. History, people die, the books are destroyed, buildings are destroyed, governments fall on the rise. And that was the paradigm so far. But I'm wondering if we're entering an age where instead of forgetfulness as the bottom of all data, we have full transparency and full accessibility towards everything. So a perfect historical trail, the more further up we move towards history. What do you think about this, Kostas?
The data so far in historical data is based on physical means. It's the first time that we, I think it was the last 35, 40 years that we started storing data in computer files and magnetic tapes and so forth. So basically what we are looking at is a new set of storing, a new way of storing data. So blockchain is immutable in the sense that all the data that it's been contained in multiple copies, right? So you have every node within the network containing the same data. So it's virtually and theoretically impossible for the data to be lost. So this is one thing. The second thing is that this data contain pseudonymity. I would like to stay here a bit because people are misled and think that blockchain is anonymous. Basically, it's not. It's pseudonymous as long as you are doing transactions with a friend of yours over the internet and both of you are happy about the transaction. If you are not and one of you start a dispute, then we are looking at both of these persons that were collaborating so far to do this transaction, and we are trying to find who is wrong and who is right. And this is a job for the courts. This will end up in a court. So I would like to stay a little bit here because of the fact that it is in the nature of people to do what they are, what they think it is best for them. We do what is our best interest. So it is impossible to do malice if you know that in the medium that you transact, there is a very high probability, and it's no probability, it's a certainty that somebody will find out. So that's a representation of Plato's ring of Gyges. Basically, it was a myth that described what a person that could be invisible could do when nobody sees him. And this is exactly the reverse. That means that when you know that you are being watched, it is impossible to do something wrong because you will be caught. So in the long run, we are talking about a truth machine. And this is very important, both for the data that we have stored, but also for the long-term integrity of the data that will be stored as historical data. So I want to also stay a little bit in the subject that Ian has mentioned before about differential privacy. This is a very, very nice method. It's an old one, it's an old idea, introduced by Cynthia Dwork in 2006. I think that blockchain has all the ingredients that we need in order to construct such a machine that will be able to learn from data that are also private. So that opens up a very big field in bioinformatics, for instance. You can upload your medical data. If you want to be anonymous, then you will be anonymous technically and really anonymous. And the AI agent that will be stored inside the blockchain will be able to use that data and learn from it. So right now, all the data scientists around the world are consuming time into NLP, natural language processing. You know why is that? Because it is easy. You don't have to get GDPR for data that has to do with how to read from a written paper or read if that letter is an A or B or C. With medical data, this is an entirely different story, and we need a solution for that. So blockchain right now has the ability to store big blocks, big data, but we are not already there. We are close to that era that we will be able to upload our whole genome, if you prefer, inside the blockchain. And nobody will be able to pinpoint who that data belongs to whom it belongs to. So that will open a very big door into actually find the cure for many genetic diseases, maybe even cure aging, who knows?
Yeah, this brings me a little bit back to some of the very basic reasons why all three of us are in the blockchain space, essentially, and some of the work that Ian has pioneered around triple entry accounting, and the fact that throughout human history we have had ledgers and we've had methods of writing down information and correlating it with others, with partners, trade partners, business partners, and usually that ledger had a watcher, right? Whichever system that we have, either political or financial or economical, you always had someone to watch over. And one of the reasons I feel that we're all in this space is that the blockchain gave us a glimpse in a system where the watcher and who watches the watcher, which is, you know, the eternal question around these systems, is the answer to this is simply everyone. Everyone can watch, and everyone can have a trace back of information that is or acts or evidence against anyone who has perpetrated a bad thing against this system. And so, with that in mind, I want us to move towards the final questions, which essentially center around the magnitude of all these things that you've talked until so far, and how do we make a system that can manage all this data? How do we make a system that has the infrastructure to be able to process the history of humanity and fuel it into an artificial intelligence and feed back to us useful data? Just a few days ago, we saw that Ethereum, for instance, it started choking and the transaction fees started going through the roof just with 1 million transactions a day. How do we build a system? Is the blockchain the best place for this? Do we have any blockchains that actually work with an efficient manner? What do you guys think? Let's start with Ian.
Thanks for that curveball. There are multiple ways to scale up a blockchain. I don't particularly want to get into naming names, but big blocks have clearly been shown to work. The possibilities of replacing proof of work with proof of stake and delegated proof of stake and so forth have been shown to work, at least assuming certain assumptions. So it's certainly possible to get the transaction flow up to thousands today, thousands of transactions per second. Tomorrow we can go to tens of thousands, 100,000 and so forth. The technologies are there to be able to do this. You have to balance your assumptions as to what it is you're going to accept. So I don't see a problem in the future putting vast numbers of transactions on blockchains. And of course, we know that we can also have vast numbers of different blockchains, so we can cross.
Great, but in this specific case, if we're looking for interoperability and the largest possible pool of verified data, do you think that there's space for multiple blockchains, or do you think that network effects are going to cause a coalescence into one blockchain to rule them all, essentially?
Oh, I think there'll always be multiple blockchains. There will be, of course, a dominant blockchain, but that's the nature of things. As we move forward, the key thing about the data is that it operates to some sort of standard, such that when you place that data onto a blockchain, that piece of data is sitting in a packet somewhere, whether it be a UTXO or a message that's gone into one of the message-based systems, or it's a smart contract that's sitting on something like Ethereum. That can still be picked out of the context of the blockchain, and it can be treated as a signed piece of data in and of itself. the signature is the blockchain, if you like, even if there isn't an explicit one. So once you get a situation where you've got multiple different blockchains and they have managed to, if you like, create their niche of a particular form of data, and you want to start melding those across the two different blockchains or the multiple blockchains, it's a matter of just pulling the data out and using the authority of each blockchain to keep that data consistent. So I don't see that as a problem.
I see. Kostas, would you like to give us a few comments on the scalability and infrastructure that all this construct could be looking at going forward?
I explained a little bit earlier that this is basically a Moran process. That means that the most prominent blockchain will probably be the most dominant. So I agree with Ian on that. Right now in Ethereum, for instance, which was the first platform of blockchain that we saw basically smart contracts to start happening a while ago. All of the programmers there have the same problem. The memory cost is very high. So the gas really limits tasks like deep learning, for instance. We have discussed with two scientists that they did the project on IMDb titles. And they did that because of the fact that IMDb titles was text, and they were able to do deep learning into their perceptron, their neural network, within very few amount of money. Because if they wanted to do something more complex, like let's say this deep learning into images or what, but they could not because Ethereum was a very expensive platform to do so. So in my humble opinion, you need two basic things. The first one is big blocks, and the second one, you need very low fees for the transactions. There are a couple of blockchains right now in the field, which is BCH and BSV, which are forks of the BTC that happened 2 years ago. Those are very interesting platforms, and if you want to do deep learning and store AIs on that. Not that EOS or Ethereum is not capable of doing something like that. But in my humble opinion, you need to have these very important ingredients in order to have something like an AGI tomorrow.
And for everyone else listening, I would like to point you back to the paper of Kostas and Ian, where the actual proof of concept took place, and where we have there is some data around which blockchain would be more ideal for this future application. So as we're coming towards the close of this conversation, I'd like to open the floor essentially to both of you and try to get your opinions on the more practical side of things. So if you could describe to me a successful business story or some business continuity that you can imagine where we could combine these two elements we've been covering together, so artificial intelligence and blockchain. Let's start with Ian.
Sure. I think the headline interesting use case that's going to happen here is pure transaction flow. And by this, I mean, if you have a bunch of cooperating companies working together in a particular supply chain context, what they're going to be doing is trading amongst themselves. But each of those trades will have a lot of different events circulating through each particular trade. You have, for example, acceptance, offer and acceptance. You have deposits being made. You have delivery notes being created. You have performance milestones being done, an invoice being generated, payments being done, outages and errors and so forth. All of these things can be coded up as a series of events in a complex state machine that creates a fact onto the blockchain for each one of these events. Now, these are very interesting events because they're unlike the events that exist in a normal accounting system inside a company. Inside a company, what happens is the accounting is basically just a view on reality because it's an opinion made by the person, which is the same as the company, and therefore the person is actually biased to change the numbers, etc., etc. But in the context of putting it onto the blockchain, we have a different situation. The event is actually authorized, or it's stamped by both parties, the recipient and the sender. So you get this situation where you've got two parties to a trade, and they both agreed to each event, and the next event, and the next event, and the next event. So you have this series of, if you like, self-proving events which go through the blockchain. Now, we call this triple entry because each party holds one of these events, and the blockchain is a third party that holds the events. Now, once you do this, what you've got is a series of facts. These are now the reality. They are the foundation of a new generation of accounting. Because the parties have already agreed, they're not going to back out of that agreement, even if there's some minor errors. They will accept that these are the facts. We've now got reality on the blockchain, and accounting will be built on reality as opposed to being built on the opinions created internally. Now, what this leads to is the ability to automate large parts of the invoicing cycle. And once you do that, you can also turn around and audit in the same event, which is to say you can get real-time auditing. Every event that occurs can be audited in the instant that it occurs. And you can do this in code. You could do this in a state machine inside the blockchain. You could even do it under homomorphic encryption such that the auditing that is done is opaque, is invisible to everybody else, but it comes out with this result that says, yes, that's a clean audited transaction. And if you move forward and start thinking about that, once you have now set up the audit process to be automated and on the blockchain, what's the next thing to think about? Well, taxation. The tax people are going to be looking at this and saying, well, you've obviously audited everything precisely as it happens. Why can't we just carve out the tax payments that occur or the fees that occur to third parties or whatever it is and do that in the same process? And we're now getting to the point where we are now incorporating, if you like, real-time taxation into the invoicing flow, which, of course, nobody particularly likes taxation. But if it works, what's happening now is you've actually solved your headache. You don't have a headache anymore because the whole thing is done perfectly audited, perfectly to the rules, perfectly to the code, and it's all over. You no longer have this end-of-year drama of having to prepare tax reports and so forth. It's already been done on the blockchain. Now, this raises a lot of questions. Obviously, the tax people and the audit people and so forth are going to be piling all over this and saying, my God, what are we going to do? You know, is this good? Is this bad? Everybody's going to have an opinion on this. So it needs to emerge slowly, bit by bit, and it will emerge slowly because what will happen is groups of companies will find some small piece of data from which to start. So you get these green shoots gradually stepping little bit by little bit towards the ultimate goal of having an entire supply chain being perfectly audited and perfectly taxed.
I think I understand what you're discussing, and beyond taxation and beyond auditing, it would have profound implications towards corporate governance as well, which is an area that needs work globally, not just in the EU or in the US. And to me personally, what you're saying resonates on a very deep level because it also implies a sense of reciprocity between the taxation agent on one hand and the taxable entity on the other hand. So instead of this being just a linear relationship, now the person paying the taxes can look back into the money that he paid and essentially follow that trail around to see where it ended up, which brings some very interesting political and socioeconomic implications. But let's get a closing statement from you, Kostas, on the practical aspects of artificial intelligence and blockchain, and where do you see the biggest benefit for the industry in the next while?
Okay. Okay. I would like to remind you about a 100-year-old theory from Kurt Gödel, which is the incompleteness theorem. Basically, what it states is that no theory can be self-contained and be at the same time complete. Mathematics, for instance, can have problems that cannot be solved through mathematics. So you need to insert a new set of axioms in order to expand mathematics and solve this problem. We've seen this happening with Riemannian geometry and Euclidean geometry. We've seen this happening with all scientific fields and computer science. And now we are going to see that with artificial intelligence. Artificial intelligence is the new set of axioms for every scientific field out there. And I strongly suggest that maybe blockchain is another set of axioms. That means that we do have two, as I like to call it, two Gödel expansions that will probably be the vehicle for humanity to go a step further and not stop where it stands right now. We probably will see that within the next decade. I don't like to make predictions because we are looking at an exponential curve that will soon may turn super exponential. So we may be a few years or a few decades away from that. But I assure you this will happen.
All right. And let me drag you back to the practical aspects of it, though. I think I understand this theory, and it's fascinating, but it's a little bit more philosophical than what I was aiming for. So let's talk a little bit more about the point that you brought up about the human genome and blockchain and artificial intelligence. Or is that too secret to talk about right now?
Well, that is only a use case for now. I think that every deep data scientist will have to look into this kind of information handling, let's call it, inside the blockchain. Supply chains like a big city or a big company will probably benefit from something like that. Maybe a whole country will benefit from something like that if they decide to incorporate blockchain and AI within their infrastructure. Imagine a big city that will be able to predict how many garbage will it be able to produce the next day. Imagine to have the ability to predict with high accuracy what is the power they will consume the next day. So it all boils down to a more green society, more economic for the world. This is why I expressed my philosophical aspect just a little bit earlier. In my humble opinion, there will be no field that will not be benefited from something like that.
I'm pretty sure. I just want to resonate back with the many hundreds, if not thousands, of people who are listening to us right now and are building businesses or run enterprises, and they want to have a slightly firmer grasp on how that future would look, so that they build it for everyone to use, essentially. And to this end, I want to bring up some of the old examples that we used to use in the blockchain space of what may happen. And one of the things we talked a lot about was the Internet of Things. We talked about smart locks, we talked about self-driving cars, asking for priority in a specific lane and doing microtransactions to anyone that was ahead of them, so they may veer out of the way and they can move faster. But now we can take this into another level. We can essentially use this micro monetization between the data producers, which is going to be us, it's going to be our machines, it's going to be our locks, our washing machines, everything. And to the processors of this data or the artificial intelligence itself, if it has the ability to do monetary transactions, and that will flow through economically towards those who buy the actual data or the results from the artificial intelligence. Those that survive, at least, as you said, right? Because they will be competing each other. They will be competing with each other on who is the most fit for a specific task. And we'll see some deal only with natural language processing. Some will focus more on image recognition. Some may focus more on gaming, and some may focus more on auditing. In the other hand, but what I see from a business perspective, which is very interesting for me, is how this ties to the concept of micro monetization. And it's something that we've been talking about in the blockchain space for the last 10 years, but we haven't really seen it in practice. So with that, I want to get your closing remarks so we can wrap up this conversation.
Shall I go?
Yeah, Ian, please.
Yes. So clearly that's a wonderful dream, but there are too many moving parts for any group or industry to be able to put them into play at the same time. So you need to start from somewhere and then build on some very small foundation and inch your way up the chimney. And the way I see this happening is you need to look at the transaction flow that various industry sectors start to put onto the blockchain for communication purposes. And I would particularly look at things like supply chain and so forth. And it will not happen in, if you like, an industrialized or institutionalized fashion. It'll start out by some small group just shoving something on the blockchain and then discovering somebody else accidentally thinks, oh, that's good, I can use that. And then they start to cooperate. It's going to happen from the grassroots. And until you get lots and lots of this data moving back and forth on the blockchain, you're not going to see the next level, which is to start doing the micropayments, trading the processing, starting to compare information and compete for information and so forth. You have to have a base. You have to have something that's moving before you can start to build.
Absolutely great. Thank you for that, Ian. Kostas, one closing remark from you.
Yes, I believe that this technology is the vehicle to the future. I agree with Ian. We are at the very, very beginning of that, even if 10 years has passed since the introduction of blockchain and Bitcoin. We will see how it goes. I am very optimistic.
I'm as optimistic as you are on this, and I think that's one of the reasons we're still in this industry and not moved further on by today. So, gentlemen, I'd like to thank you for a great discussion today. I'm pretty sure there's anyone watching will have questions, and I hope we're there to answer those. But if not, feel free to research, because this is going to be a big part of humanity's future, and we need to start investing in it intellectually, at least from today. So with that said, thank you very much and have a great day.
Thank you.
Thank you very much to George and his panel for this enlightening discussion. It was a pleasure listening to those gentlemen. And right now, we finish off day one of FinTech Week Lithuania with a cherry on top. It is my pleasure to introduce to you Brittany Kaiser, who is a data rights activist and the founder of the hashtag Own Your Data campaign. She is a co-founder of the Digital Asset Trade Association, or DATA, a nonprofit lobbying firm advancing legislative reform to protect the rights of individuals to control their own digital assets. She currently works with the states of New York and California on privacy and blockchain legislation. To raise awareness of data rights, she recently co-founded the Own Your Data Foundation to train others in digital literacy. Brittany is the primary subject of the Netflix original documentary The Great Hack, which premiered in the Sundance Film Festival and recently has been nominated for a BAFTA and shortlisted for an Oscar. Brittany is also the author of Targeted, published by HarperCollins in 15 countries. Hello, Brittany. Can you see me? Can you hear me okay?
I can see you very well. Hello, everyone.
Yes. Hello. Good.
Wonderful. Thank you so much for having me.
Yeah, it is an absolute pleasure. I will pass on to you in just a few seconds. And we're back, Brittany. So it's a pleasure to see you online. What's the time in the US right now where you're based?
It's 11:30 a.m., so still the morning over here.
It's very early. You just woke up.
Yeah, I had breakfast before this, so thank you guys for staying up until dinner time to wait for me.
Yeah, it is a pleasure. So, Brittany, I pass on the floor over to you. Please go ahead with your presentation, and we will return after that with a quick Q&A. I will use this opportunity to also encourage people viewing us right now to ask their questions that we can voice later on after your presentation. So, please go ahead.
Great. Thank you so much. It's a really big pleasure to be here. I really wish I could be with you all in person, but thank you so much for organizing this for me to be able to come in virtually. And I'm really looking forward to being in Lithuania with you next time. So I'm really excited to speak to you all this evening about what I know is one of the most important issues that we are dealing with globally. I call this talk Own Your Data, Lessons Learned from Our Past to Protect Our Digital Future. Because if you haven't seen the headlines yet, a couple of years ago, data became the most valuable asset on Earth, surpassing oil and gas as the world's most important and valued traded commodity or asset. And somehow, all of us as individuals that produce the world's most valuable asset class have mostly no rights to its value. We have spent decades using different forms of technology that have been taking our assets and building some of the world's most valuable companies. Those companies like Facebook and Google, Amazon, these are companies that are so valuable because they hold so much of our personal information. They have been collecting our data since their inception, and that historical and behavioral valuable data is what makes them so incredibly powerful. So over the past few years, there has been a uprising or a movement for data rights and privacy. It was really first in 2013 when Edward Snowden released the allegations about the PRISM project and how governments and militaries and even companies around the world were collecting our personal information, that the world started really to pay attention to what is the meaning of privacy and what policies, legislation, and regulation should we have to protect ourselves. Now, I think over a few years, we got a little bit complacent until the 2016 elections, when we all found out that the amount of data that was being collected about us was being hidden, and the ways in which our data could be bought and sold and traded around the world was not well legislated upon, was not regulated, and we had nearly no transparency into how our personal information could be used or abused, and by whom. So we've obviously started to set that straight over the past few years. And I want to tell you a little bit more about my journey and, why I'm the person that's here talking to you about this. So I really began my involvement in the technology industry in 2007 when I joined the first Obama campaign. I joined a team called New Media, where I think there were just about 5 or 6 of us in May 2007 when I moved back home to Chicago to join the headquarters team. Over the first few months that I was there, we developed what is now known as social media strategy. We were the first team to ever use social media for any form of external communication that wasn't just peer-to-peer. So we developed ways of rudimentarily collecting data in very basic ways, starting with Excel spreadsheets of what we could figure out about each person that we were interacting with. How could we understand which political issues were important to people, whether people would show up to a rally or event, how we could get someone to register to vote for the first time or register to vote again? How could we figure out what drives and motivates people? And I saw very magically that just using a little bit of data was incredibly powerful. It was something where you could encourage, engage with, and motivate people to actually be involved in the political process. You could cure the disease of apathy. You could get people excited and motivated about changing their local area, their cities, their states, their country for the better. And I thought, wow, this is something that I really want to be doing in life. You can see every single day how much you're affecting people and how much good you're doing. So I was very inspired at the intersection of technology and politics and what data-driven platforms could possibly do. I spent many years after that working for charities and nonprofits, United Nations, consulting departments around the world, teaching those organizations how we could use data-driven communications, marketing, campaigning in order to achieve their lofty goals. So whether it was environmental rights or human rights campaigns, if you adopted a data-driven strategy, you could understand exactly how to engage with people, and you could even measure your results. How many people were excited about what you were talking about? How many people cared about the issues that you were campaigning on? I mean, this is very powerful stuff because, as you might know, whether you work in the commercial sector or you work for the government, everything that you want to be doing should have measurements of effectiveness. You should be able to show exactly how you are communicating with people, how well it's working, and if you are, as they call it in politics sometimes, winning hearts and minds. Are you getting people to engage with your political ideas? Is this working? And all of this is really a question of how much data you have and what types of measurements you're doing while you're running your campaigns. So over many years, I worked for these different organizations around the world, and sometimes I found it was very difficult to show what type of impact you were having. A lot of the communications that you would send out were difficult to actually show if they had reached the individual you were trying to affect or recruit or register to vote. It was very difficult sometimes to be able to prove and show that where a donor's money was going was actually being effective. Or if you're talking about commercial communications, that if you're using advertising dollars, that's actually, translating to sales or a boost in, the worth of a brand, right? So when I was first introduced to Alexander Nix, the CEO of a company you've probably heard of called Cambridge Analytica, and he told me about the types of tools that he was using and the types of data-driven strategies with very clear measurements of effectiveness that they had available in their strategies, in their client work. I thought, well, this is incredibly interesting. when I was introduced to him, I was in the middle of writing my PhD in something called preventive diplomacy. I'm a human rights lawyer by training, so I had spent many years using data in order to quantify the types of impact that we could have to make the world a better place. And fortunately, what you find is that a lot of human rights work is difficult to quantify. And when you are running campaigns or when governments or militaries are trying to implement social policies, it's difficult to actually prove a causal relationship, that you have done something that really has a positive effect on society and you know exactly why that has happened and how you can improve your strategies to really make a bigger impact, right? So I thought, well, you know, I am trying to figure out how I can quantify how governments use data in order to prevent war, in order to prevent violence and conflict. What preventive diplomacy means is that a head of state, president or prime minister, an ambassador, a head of a United Nations department will, for instance, make a phone call to another world leader and say, you know, you have crossed a line. We're going to decide to stand up for this. So what makes that person make that phone call in order to prevent conflict with another country? This strategy called preventive diplomacy really all relies upon data. What data is being collected by the government, the military, private companies, on public open databases, on social media? How can that data be collected and analyzed or modeled in a way where you can predict what is going to happen before it does? So whether it's violent conflict or even something like famine, you can use data from all of these sources in order to help prepare and prevent different types of crises and strategy and different types of crises from happening, right? And that was what I was researching. And it seemed that the SCL Group, Strategic Communications Laboratories, which is the parent company of Cambridge Analytica, that they had been helping governments and militaries and companies that were partnered with them understand how to use data-driven tools in order to do precisely that. The first project that the CEO of Cambridge Analytica ever showed me, in fact, was a contract with NATO to train all allied militaries how they could identify young people who were being targeted online for recruitment by terrorist groups. So these young people were vulnerable to being recruited into ISIS at the time, and they were training these different governments and militaries how to run counter-propaganda communications to these young people to keep them safe at home with their families instead of sneaking themselves into Syria. And I thought, wow, this is something really powerful and really special, and I want to learn how to use it. Now, I joined originally while I was still writing my PhD to learn more about data-driven strategies and measurements of effectiveness and how to run these types of campaigns. Now, over the many years I was there, I learned quite a lot more about data than I ever bargained for. What I learned while I was there was quite a few things. It actually blew my mind, the amount of data that is available about individuals all around the world, especially in America. But at the time, I was working on international projects, so countries all around the world, where I could see what data the government had, what open source data was available, what was available on the commercial market. So what was being bought and sold and traded about people without their explicit opt-in or knowledge. You know, this is many years before GDPR came into enactment and before most countries had data protection laws or privacy laws. You know, this is something that's really recent over the past few years. And even the countries that did have data protection laws, they were quite outdated. For instance, our headquarters was in the United Kingdom in London at the time, and the most recent data protection law was from 1998. And I started working at this company in 2014, 2015. So as you can imagine, the legislation that would regulate what we were doing was quite outdated and not really up to par with the types of advanced technologies that were being used at the time. So I was shocked to see the amount of companies that were holding large amounts of personal data, everything from your name and home address, everywhere you've ever lived, all of your location data from everywhere you've ever been, everything you're buying and how much and what brands, where you go with your family on vacation, where you've studied, what you read, what you're searching for, all of your activities, what's going on with everything you're using on your computer and all of the other apps on your phone. It was really, truly shocking and extensive. And even when I first joined the company, Facebook still had what was called the Friends API. So the Friends API was built for Facebook's developer program. So over 40,000 different companies signed up for access to an API that allowed them to take the data of anyone who opted in using an app or a game, whether they took the Cambridge Analytica This Is Your Digital Life app that asks you questions like, do you see yourself as a leader in society? Do you believe in the importance of art? Do you get along well with children? Or maybe a quiz, what is your favorite Disney princess? Or what country should you really be living in? Or maybe you played a game like Farmville or Candy Crush. As soon as you opted into this app, you not only gave the developer your data, but you gave access to the data of everyone else in your network. So your mother, your grandmother, your friends, everybody that was in your network's data would also be given to the developer if just you opted in, which of course is not possible under any legislative framework, but it's technically possible, even though the law wouldn't have allowed that at the time. So Cambridge Analytica and tens of thousands of other companies around the world were also using social media as a source of raw data, just like tons of the databases that you could buy from big data vendors like Experian and Infogroup, Axiom, Magellan. And in the US, there's a company even called Labels and Lists, or L2, that sells political data for commercial use. So there's really endless sources of this type of raw data that tells people everything about you. And then there's even online data sources from companies like LiveRamp, Loadame, Rocket Fuel. These are companies that aggregate all of the cookie data for everything that you are doing on your devices. So I don't know if too many people listening to this spend their time reading terms and conditions before you accept cookies on a website that you view. Or maybe I can get a show of hands of how many people have read terms and conditions of any of the apps on your phone? Any of them at all? Yeah, probably not too many hands are going up right now. But what we are doing every time we download a new app, every time we go on a new website that asks us to accept cookies, we are signing a digital contract. I don't think too many people here would accept someone to walk into their office and lay a big pile of paperwork on their desk, all a big pile of contracts, and you wouldn't just flip to the back of every single contract and sign it without reading it. I don't think anyone would ever do that. But that's what you do every single day when you download an app and just click the terms and conditions box. That's what you do when you accept cookies. And there are plenty of companies around the world that have achieved a very high company valuation because they are collecting all of this data that you so willingly give away because you haven't been protected. So then we hit 2016, and we see that in both the Brexit referendum in the United Kingdom and the Donald Trump for president campaign, as well as the different political action committees and super PACs that were supporting the Donald Trump campaign, that some of the data that they were getting access to, they were not only getting access to improperly, but they were using it to target citizens in ways that were that couldn't really be considered legitimate in terms of elections. We all of a sudden saw the rise of disinformation and fake news being scattered across the devices that we are using every moment of every day. We all of a sudden saw that foreign countries could have individuals that could go onto platforms like Facebook and use local currency to target political advertising in other countries to incite violence or spur on racial hatred. We saw that some of these campaigns were using voter suppression tactics. Under most electoral laws, you would not be able to, for instance, lie to people about when a voting booth is open or where the voting booth is located. That's more traditional voter suppression, of course. But when you are using digital campaign strategies and data-driven campaign strategies, what you are able to do is untransparently target people with specific data for specific reasons with certain content that would discourage them from participating in the political process. For instance, when you could use data in order to figure out who were vulnerable Hillary voters, who were persuadable to not vote for Donald Trump. They would never vote for Donald Trump, but they were people who maybe haven't voted every year or were not yet registered to vote. And so therefore, if you could send them enough negative content about Hillary, perhaps they wouldn't vote at all. Now, that's obviously a voter suppression strategy, but it's not something that is obvious to the naked eye. Yet we would never have the right at the time to know why we're seeing this content, who's sending it to us, who's paying to put it in front of our eyes, and why. So when concerns started coming out in 2017 and early 2018, I eventually decided to come out as a whistleblower because I realized that most people had no idea about the data industry at all, let alone how extensive it was and how vulnerable we are all as citizens. That there was nearly no protection mechanisms written into laws around the world, and that although we have the human right to our privacy, we didn't actually have the legal or regulatory protections to ensure that that this would be complied with. And even in some places where we did have some laws regulating what was done with data, we didn't even have the technology to ensure compliance, nor the technical capacity to make sure that was happening. So cue me starting to spend all of my time testifying to governments and working with investigative journalists around the world to start to uncover everything that was done with data, not just by Cambridge Analytica and its parent company, but how data was abused on Facebook and other social media platforms, and what could actually be done in order to prevent this from happening again in the future. What should laws and regulations look like? What types of technologies do we need in order to bring transparency and consent and opt-in mechanisms so that we as people can choose what we want our data to be used for? Could we ever harness the value of our data for ourselves instead of it being taken from us in what I like to call a kleptocratic way? These systems have been made to trick us into giving away as many of our digital assets as possible, which basically has made plenty of monopolies, global companies like Facebook and Google, that now control so much of our digital assets that we are powerless to regulate them in many ways. What types of ethical technologies should we be building? And how do we educate a digitally illiterate population? You know, most of us around the world are not what I would call digitally literate or digitally intelligent. We don't understand what our data rights are, basic cybersecurity protocols to protect ourselves. And how do we start to deal with that? So I guess some of you might be thinking, why should we care? Why is this so incredibly important? And it's really because today's issues are the tip of the iceberg. Every single day, we are producing exponentially more data than the day before, especially in this time of crisis, in this time of coronavirus quarantine, where most of us are now, for the first time, leading a completely digital life. We are obviously now producing more data than ever before, and more vulnerable populations like children are for the first time having to be on devices all day long without having a full understanding of what that vulnerabilities actually means for them. So there's a lot of work to be done. So I'd like to talk to you now a little bit more about what are some of the high level concepts of digital asset legislation, of data protection and privacy. I obviously started a campaign called Own Your Data. So what that means is that you would own your data like a property. Yes, I believe that we should have rights to our data and rights to our privacy as a fundamental human right. But when we're talking about enforceability, having data as an asset class that we can own like a property actually gives us legal recourse for when our data is abused, such as in a massive data breach like Equifax or the Facebook Cambridge Analytica scandal. We'd actually be able to protect our property legally and win in court, right? Instead of just seeing a fine being given to a company that, like Facebook, that earns all of that money back in one day because of the rise in their stock prices from all of the press they get. But as you might imagine, for a company like that, all press is good press in a way. So we need to start thinking about enforceability. So something that might help you land the plane about what the concept of data ownership really means. And it's to say you own your personal information like you would any of your other property, like your house or your car. So if you think about the Airbnb model, if you are owning your data like you own your house, then imagine when someone approaches you on Airbnb as what the future of data ownership could look like. If someone wants to use your data, they would tell you who they are, how long they're going to use it for, what they want to use it for, and you would agree on a price before you hand over your keys, like giving someone access to your personal home. And that's really the way that we need to think about what this potential business model could look like and what all of these different initiatives for legislative reform could actually mean. Some other important concepts in data protection are transparency and opt-in. So I should know everything about what data is being collected from me. Right now, if you look at terms and conditions, the reason why you probably haven't is because there is a 46-page tiny type written in legalese by lawyers who are specifically trying to hide from you what they are taking. Right? So even if you have spent the time to read it, you still might not understand what is being collected, where it's going, where is it going to be held, for how long are they going to hold it? Are they ever going to delete it? Are you ever going to have access to that data file on you? Can you opt in and out? Luckily in Europe, because of GDPR, you do have the option to not opt in. You are not automatically opted in like you are in the United States, but just a couple of years ago, you were. In fact, GDPR only went into enactment on May 25th, 2018. So the day before that, actually sponsored by the government of Lithuania, I was speaking on the opening panel of what was at the time the European Parliament's largest blockchain conference. And we opened the first panel by being asked about GDPR, which was going into enactment the next day. And what I said was, hey, GDPR goes into force tomorrow. And tens of millions of people might request a copy of their data because they now actually have the opportunity to do that. Who here is ready to send them a data file in a secure way? How are you going to send tens of millions of people their personally identifiable information and sensitive data tomorrow if they request it? And the moderator of the panel, who was the former prime minister of Estonia, laughed and said, oh, well, you know, we wouldn't want to attach it to an email. Maybe we'll just fax it to them. And, you know, everybody laughed. But as funny as the joke might have been, the point was that nobody really had a good plan yet. And we were less than 24 hours away from citizens all over Europe being able to request a copy of their data. And there was no real secure system set up for them to be able to receive it. And we've seen over the past many years that, you know, the information commissioners are receiving an extraordinary amount of subject access requests. That's what it's called when people request a copy of their data under GDPR that are being sent to companies or government departments, and they're not getting a fast enough response. So that's being kicked over to the information commissioner, and the ICOs are now completely flooded. They have really held their hands up and said, we don't have capacity to answer all of these in a timely manner. So the actual enforcement of GDPR has not brought the type of transparency that we've been hoping for. It's obviously a good step, but it's been very, very difficult to respond. So if we're going to go to the next concept, so I want to talk about permission structures and traceability. Whether or not new data protection and privacy laws around the world actually give us the right to have these permission structures, we still don't have too many different technologies that allow for traceability. This is why I have become such a huge advocate for blockchain technology. I mean, it's not the only. I go on for hours about all of the excitement that I have about different forms of distributed ledger technology. But when we're talking about tracking and traceability and the ability to give permission to a company to perhaps use certain parts of your data and not others, or use it for specific purposes and not others. You know, for instance, I might be happy for a brand to try to sell me a new car, but I'm not happy for my data to be shared with political parties, just as an example, right? So I think that the types of permission structures that you can give in a smart contract, for instance, where you have a self-executing contract that says, I opt into this, I don't opt into that, and you can do that instead of just signing or not signing terms and conditions, will in the future be able to give us assurance that our data is being used in the way in which we've permissioned it. So this is really a technology solution as opposed to a legislative solution. Now, my favorite part of the whole data ownership and data rights conversation is this. Now, you know, stay with me here for a minute. The right to monetize your own data. So I really believe that data can become the great equalizer. We are producing the world's most valuable asset every single day, and somehow we are instead just enriching companies to the tune of trillions of dollars of our assets. We are the producers of a multi-trillion-dollar industry, and none of us are seeing real value in return for that. You know, Mark Zuckerberg likes to lie to us and say that our data is only worth $17 a quarter. You know, our data is worth an exponential amount depending how it's modeled, how it's shared, what we decide to become data inputs into different types of commercial affairs, research, government programs. But Facebook data alone, $17 a quarter would change the lives of a couple billion people that live on under $2 a day. So let's start to think of this in a practical manner. For you and I, it might not make a big difference that we're earning, you know, a couple cents here and there, a couple dollars here and there. But for a big percentage of the planet, it really does. Now we can start to think further past Facebook data. If I use my medical data to become an input into diabetes research, for instance, I could make $28,000 on 6 to 8 weeks of my data if I'm eligible. We have the possibility to become data inputs in a secure, transparent, and responsible way, and be sharing our data with important projects all around the world and be compensated for it monetarily so that we can take care of ourselves and our families. So we need to start thinking in this way. How can we secure data rights and privacy in order to therefore secure our human rights and make our societies and our countries better off? So, when we're talking about privacy versus data science, it might sound weird for you to hear me say that I am not the biggest privacy advocate. In fact, I like the right to privacy because there's always something that you might want to keep to yourself. But I'm more a fan of what I call radical transparency, which would mean that we would encourage people to share as much data as possible, but they could share their data anonymously or pseudonymously. We could securely share our data. We could know exactly where it's going, to whom, for what purposes it's going to be used, and if it will be monetized, again, for purposes that we agreed to, then we could share in the profits of that. So I really think that AI and data science could solve a lot of the world's greatest problems, from stopping mass shootings and terrorism and car accidents to making sure that we can solve diseases faster. Right now, we're in the midst of the coronavirus pandemic, and you've probably seen both private companies and governments that are rushing to put out contact tracing apps because we've figured out that it might be possible to stop the spread of the virus if we can find out where somebody has been and who they've contracted it from, and help people who might have been exposed to quarantine themselves and not interact and possibly spread the coronavirus to somebody else. Now, this is something that I would love to be able to feel comfortable with. I would love to be able to encourage people to use technology to help save human life. I think we can all agree to that. But right now, especially in the United States, but now we've seen, protests breaking out across the world, and I support peaceful protesters. I support our right to peaceably assemble. But law enforcement could very easily and has been using contact tracing data, location data, in order to target protesters. And that can become very dangerous. There's many countries around the world that have already used this to abuse and target certain portions of their citizenry. And we need to be very careful about what this means. So over the past few weeks, I have been working with the state of New York to put forth the first bill in the United States that is emergency legislation to protect coronavirus contact tracing data, to make sure that we know where it's going, that we have a limitation for how long it's going to be held, that we have anti-discrimination clauses, a ban on sharing that location data with law enforcement, et cetera, and so forth. There's quite a few different stipulations. It's Senate Bill number 8448, if anyone wants to look into it further. There's also now a federal bill in the US and many other countries that are considering this type of legislation. So if anyone here has the ability to influence policy on that subject, I would highly suggest that both the government of Lithuania and any other countries represented here would consider something similar in order to protect the privacy and the safety of citizens who are obeying the law while peacefully protesting. So there's a lot that we really have to think about. I really want to make sure I leave room for questions. But besides the legislative work that I've been doing, I also started last year something called the Own Your Data Foundation. And what we do is digital literacy training. So we teach people a new curriculum called DQ. Like IQ or EQ, it's a digital intelligence quotient. And that is an indicator set that's been developed over the past 10 years by some of the world's top organizations in tech, from ministries and government departments to top universities and think tanks. And this teaches kids, parents, teachers, first and foremost, but there's also a professional training program, what your data rights are. What are basic cybersecurity protocols to keep your data private or to share it securely? Media literacy to spot fake news and disinformation, hacking and phishing attempts, how to prevent cyberbullying, and use emotional intelligence when interacting with other people online. How can you have a healthy relationship with devices and not be addicted to them, and manage your screen time? All of these are in an indicator set that will give you a DQ score, like your IQ score, and a systematic approach for improving that. And I really think that digital literacy is going to help people protect themselves while we're still waiting for legislation and regulation to keep up with technology. But so that's what I'm spending most of my time right now doing. I really think that we need to have a three-pronged approach, which is legislation and regulation that is much closer, or much more closely representative of how far technology has come. I spend a lot of time putting technologists and legislators together to make sure that technology and legislation actually support each other. We need more ethical technology, which is why I care so much about the development of blockchain and other forms of advanced encryption and tracking and traceability methods and data management solutions. And then, of course, we need the educational piece. We need people to be digitally literate in order to understand how to protect themselves online and lead a successful digital life. So thank you guys so much for listening to my talk, and looking forward to your questions. I know we don't have time for too many right now, but if you want to reach me at all, you can get in touch with me at info@ownyourdata.foundation, or you can tweet at me at ownyourdata.now, and I'd be very happy to be in touch with you guys. Also, for more information on these topics, you can watch my Netflix original documentary, The Great Hack, and read my book, Targeted. Thank you so much.
Brittany, thank you very much for a very interesting presentation. It was a pleasure listening to you speak. As you mentioned, the documentary, I've already seen it. I haven't read the book, but I will encourage everybody to go ahead and look it up and try and read it. I'm sure you'll provide a lot of meaningful insight on data literacy and owning your data and so on and so forth. So a couple of questions. Actually, as a matter of fact, I can say that probably no contest, your presentation was the most sought after, obviously, as I can see on my screen and here on my clipboard quite a few questions that people want to ask you. So I think we're going to make it into a very interesting and enlightening discussion. So one of the questions that I had to you, so Shoshana Zuboff, I don't know if she coined the term meaningful consent. And when you talked about the agreement to the terms and conditions, right, that according to the British comedian Eddie Izzard was written by a bunch of monkeys because nobody ever read the terms and conditions, right? So
Right.
You can literally dance on the keyboard and people will hit agree in the end. So I'm hearing certain fintech startups, at least in Lithuania here, are actually moving towards what they call, I'm not going to use the full word, no BS policy. Because it is really impossible to, first of all, be able to read through pages and pages and pages of legal documentation written by professional lawyers that the company gets protected with. And they took a different approach in the sense that they said, okay, no BS. This is where we're going to use your data. Blah, 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 follow this, and that, and this, you're going to know. We're going to use it for marketing purposes as well. But at least they tell you and they come clean on what they're going to do with your data. What do you think about that kind of approach? Do you think it's a better approach than having, well, thousands of pages of text of legal documentation? What's your take on that?
Absolutely. I think where we're moving, is to an area where we're going to start giving people very transparent, easy to understand opt-in or opt-out solutions. So instead of 46 pages of legalese, you're going to get bullet points that are written in third grade reading level or below, where you get told exactly what is going to be collected from you, who it's going to be shared with, for what purposes, how long they're going to keep it, and you can toggle on or off whether you are happy with that. You might want to share it with certain companies and not others. And then if you decide to toggle all of it off, because you don't want to opt in to all of this data collection and sharing, then you would still be able to use the product. Because obviously most people are still going to opt in to some things, and a lot of people, it's going to take them a while before they even want to look into the terms and conditions, even if they are bullet points. But in the United States, we're at least already getting there. The Federal Trade Commission is saying that the way that terms and conditions are written right now are in contravention of consumer protection standards, because you are coaxing citizens into giving away something that they don't understand they're giving away. So I really think over the next couple of years, we're going to see that change. Even when GDPR came into enactment, you started to see a lot of companies, when you visit their website, that you can either choose to accept cookies or you're given options, and you can open that up and you can understand what those options are, whether or not you want to share something for marketing purposes or political purposes, or whether you want them to keep your data or delete it. So I really think we're starting to get there, and over the next few years, you're going to see a big change.
And I think the point that you mentioned here, that opting out of everything doesn't mean that you will be also opting out of the actual service that you want to use, right? So that was a follow-up that I had, but you already kind of touched upon that already. So I'm going to move on to a next question that I also had. I mean, to a certain extent, and answer truthfully, what do you think? You lobbying in the governmental institutions against tech giants such as Google, Facebook, Twitter, keep on, the list goes on and on, right? Do you think, is it not a little bit of a kind of David versus Goliath type of situation? Can you speak to that a little bit?
Well, I definitely think for a little while it has been a David versus Goliath situation, because these companies are more powerful and more financially stable than a lot of governments. So trying to regulate these corporate giants has been incredibly difficult. The United Kingdom couldn't even get Mark Zuckerberg to show up for testimony. And because GDPR had not yet been enacted when the 2016 data violations happened, and I suppose the collection of data off of Facebook in 2013 and 2014, Facebook was punished under the 1998 Data Protection Act, which capped any fines to the company at £500,000. So that's really difficult to show compliance when you don't actually have the power to wield against a company. And even in the United States, where we managed to give the biggest fine ever at $5 billion to Facebook, they still made that money back because of all the press, which is what I referenced in my talk. So without having real teeth and enforcement in our laws, I think it's going to be very difficult to force corporate giants like Facebook to become more moral and ethical about their commercial practices. So that's why I advocate in all of my legislative work for criminal punishment for contravention of data protection and privacy law. If through gross negligence, like in the case of Facebook and for Equifax as well, you have not been able to protect the citizens' data, there should be a criminal punishment with that. Senator Elizabeth Warren specifically introduced a law last April into Congress called the Corporate Executive Accountability Act, where, again, through negligence, if you allow a data breach, then it is criminal punishment. Incentive to prevent data crimes than a small invoice that an executive can easily pay.
Thank you. And then you already started kind of touching upon Facebook, and I'm very also curious to know what your take on the reputational damage that Facebook kind of inflicted on itself after the 2016 election, and obviously with the kind of slap on the hand, slap on the wrist, and everybody's okay. We continue with whatever was going on, kind of in the same way. The 2019 presidential election is coming up this November. Do you think we are going to see any differences in the way that social media is used for politics? We hear articles in a number of different technology outlets, news outlets, and what have you, that say that some of those companies started kind of self-regulating. Twitter, I think, was in the headlines recently. Google was in the headlines recently as well. What about Facebook? Do you think is going to be more of the same in the 2019 election?
Unfortunately, I have seen that 2020 has become a lot worse, except for Twitter. I mean, what Jack Dorsey has been doing over the past many months is very laudable. Firstly, after Mark Zuckerberg decided to say that he would not moderate what content politicians were putting out, even if it violated community standards that you and I are held to, then Jack Dorsey said that he was going to ban political advertising altogether, which, that's a lot of money to decide to not take. So that was a very upstanding way of him saying we do not have the human and technical capacity to stop fake news and disinformation from intervening in our elections right now. So we are going to take it offline altogether. Fantastic. Also, his willingness to label, all politicians' content as against certain community standards or laws, namely President Donald Trump's recent incitements of violence and disinformation around coronavirus, have been incredibly effective. And I'm sorry that, Mark Zuckerberg has decided not to take the same steps. It's incredibly disappointing and dangerous to our democracies. So I think we have a lot more work to do, and I'm unfortunately terrified at what we're going to see between now and November 3rd.
So effectively, you're saying we're a little bit screwed in terms of our democracy, right? With the lack thereof of any steps from one of the biggest social media platforms nowadays, namely Facebook, right? We can expect to see fairly same scenario that we had in 2016.
Yeah, I would say we're going to still be targeted with fake news and disinformation from both foreign entities as well as domestic. We're still going to have quite a lot of problems with the way that politicians are using data in order to target vulnerable populations with voter suppression tactics. And of course, during the rise of the Black Lives Matter movement and issues with race relations in the United States and abroad, we have also seen the usage of social media platforms and digital micro-targeting in order to incite violence, in order to bring further problems in some of the protests. We've seen violent factions that are actually being encouraged with foreign funding, like the white supremacy movement in the United States, where we're actually seeing funding coming from abroad in order for them to infiltrate peaceful protests and to create damaging and violence. So there is both a digital and physical problem coming at the lack of regular social media platforms and of our data itself.
Thanks very much, Brittany. I want to move on to our audience questions as well. I don't want to steal the entire show or your entire time. I hope you still have time to spend a little bit with us, and I want to jump on to the audience questions. Perfect. What can be done on an individual level to own your personal data right now?
So right now, there are a lot of platforms that you can be using to protect your privacy. I would say, for example, you can use Wicker in more soon chat. Well, well on the blockchain in order to be having actual private encrypted communications. You know, get off of WhatsApp as soon as you can if that's what you use for your communications. The co-founder of WhatsApp both quit when Mark Zuckerberg started weakening the encryption in order to pull more data from it to monetize with Facebook targeting. One of them even sold their Facebook founder shares and donated $50 million of that to the Signal Foundation and joined their board in order to run for an actual encrypted form. Instead of using Google Chrome, you could be using Brave browser, where you can, earn cryptocurrency for searching on the platform where they collect none of your data and fully protect your privacy. You can use DuckDuckGo, which has been around for a very long time and is a great browser as well. And I would say even start more simply, actually read the terms and conditions of some of the apps that you are using today and decide whether you're comfortable with what you're giving away. Think about who is the company that actually built that app, who are the developers, and are you comfortable with them perhaps taking the data that you are creating in other apps, all of your data from your contacts, your photos and videos, your live location data. Are you okay with that? Because if you're not, you should probably delete those apps and find another way to access the services or convenience that that app has been giving you. Look at your privacy settings. I'm still on Facebook. I just don't have it installed in my phone because I would say if it's installed in your phone, it's basically spyware. So I would highly recommend that you log into apps where you're not comfortable with the permissions and log into them in a secure browser on your computer and use it that way. So I just log into Facebook every now and then, on Brave browser, DuckDuckGo, and do whatever I need to do. And then I close it back down, always log out of it. But look at your privacy settings in Facebook. Look at it in all of the platforms that you use. Always check out your privacy settings no matter what you're signed into. And if you are not comfortable with how they are, change them or stop using that platform. So start to actively engage with what your privacy means and why you would want to protect certain data. There are steps right now. Over the next couple of years, we're going to see the rise of a lot of, very well encrypted or blockchain-based platforms that are meant to not only help us protect our data and our digital identity, but find safer ways for us to interact in our digital world and even to monetize our own data. There's a lot of exciting projects coming up. For instance, Rainfall, which will be coming out next year. And that shows us all of the data that we're producing, everywhere that it's held, and how we can monetize it for ourselves in our own digital wallet. There's tons of companies that are developing solutions similar to this. And I really think we're going to see a lot of really exciting and impactful projects come out in this space over the next couple of years.
It's really a good thing that our conversation also is getting recorded and is going to be available for the platform viewers tomorrow, because you have just shared quite a few meaningful ways of actually protecting your own data, and people probably couldn't just kind of, write everything down, but I think this material is very important. So I'll jump on to another question from our audience. What are your thoughts with using blockchain in regards to privacy? Do you have any specific project applications with your company using blockchain?
So I sit on the board of quite a few different blockchain companies, helping advise them on data protection and privacy strategies and what it really looks like to have transparent terms and conditions and to help people understand what they're opting into and how to protect the data that they're producing in that platform. And I think there's a wide range of different types of blockchain projects that everyone should be keeping their eyes on. And, that's everything from specific digital identity projects so that you can have your entire digital life or, your digital avatar, your digital twin, all encapsulated in one application information in one digital wallet, and you can start to see what data there is about you, what data you might need to share with people in order to, for instance, log into a platform where you might use Facebook or Google to log in right now, and then all your data that you produce in that new platform is shared with those companies. Instead, you would fully own your digital identity and be able to own your own private keys and interact in a private or pseudonymous way with different platforms and share as little data as possible in order to lead your digital life on a daily basis. So there's digital identity projects and there's data monetization projects. So they will help you earn a living or a universal earned income, you might want to call it, off of your data. And then the third would be blockchain-based social media platforms. We've seen a huge boom in that. I think the most popular ones out there have been voice.com from Block One and Chirp out on Links. These are really exciting opportunities for you to engage on social media without giving away all of your personal information and that of your friends and family. So I really hope to see the rise of a lot of these social media competitors as well. So from digital identity to data monetization and new social media competitors, I think the blockchain industry has a lot to look forward to over the coming years.
Thanks very much. I think you touched upon that a little bit. There's a question about data coins as a currency. Do you think that we will get to the stage of actually having data coins?
Well, I mean, all of our coins and tokens that we use in blockchain are just blocks of data already. It's just encrypted blocks of data. So we're already saying that this data is so valuable once it's encrypted that we are ascribing an enormous amount of value to it. So all of the cryptocurrencies that we're using, all the different asset classes of digital assets, from utility tokens to digital securities, we are saying that data is very valuable. Data holds value. So when we're starting to ascribe data different value points, obviously it depends what that data is, what it's going to be used for, whether it is a security or utility or even a membership token, whatever it happens to be. We are saying that it is valuable and there is a value exchange for that encrypted block of data. So when we're trying to monetize our personal information, I don't see anything different than the way that we are monetizing, Bitcoin or Litecoin or EOS or Bitcoin Cash, whatever it happens to be. We're talking about data, and how that data was created and how it's valued depends on what it is going to be used for. So as I said in my talk, whether my Facebook data is worth $17 a quarter or whether my healthcare data is worth $28,000 in an 8-week diabetes study, it depends what it's going to be used for and who can make use of those data points. And that's why I think a lot of platforms that are helping us monetize our data and helping add value to the raw data sets by modeling it for commercial, political, defense purposes, whatever it happens to be, that we're going to really see the data marketplace and the ability for us to actually have a universal earned income coming into our wallet every day in tokenized form as a real possibility.
Brittany, thank you very much. I have one more question that I'd like to ask. I think a lot of us actually came to a similar conclusion post the recent issues with data being misused and all of the news kind of news articles that showed up with regards to the misuse of personal data. The kind of immediate response to that from a person that doesn't necessarily have all the literacy is, should I limit my use of the social media platform because less activity I do on the platform means less data for the company, and that way I kind of punish them and they don't know as much about me and therefore cannot micro-target me or push in ads or what have you. Do you think this is a meaningful way of actually protesting against social media companies?
Absolutely. The less time that you spend in a platform, the less data you are giving them. It doesn't obviously stop them from being able to buy data about you from your banks and credit card companies and all the other apps that you might be using and all of the big data vendors that are collecting your online activity. But if you start to take your privacy seriously and produce less data in general for them to buy, then yes. And within the platform is the most valuable data for them because they're the only ones that hold it. So it definitely makes you less vulnerable to micro-targeting, especially if you spend less time in the platform because that's less time looking at those ads. I really encourage everybody to take seriously management of your screen time. A lot of phones these days actually show you how much time you spend on your screen on a day-to-day basis. I know we're not able to go and hang out with each other so much right now due to quarantine measures in order to protect human life, and we have to lead more of a fully digital life, but please spend less time on your screens than you think you want to. We don't want to come out of this coronavirus epidemic where we're more addicted to our devices than before we went in. That makes us more vulnerable to targeting. It creates more data for companies that is not yet regulated, that we can't track and trace where it's going. So I would absolutely say that all measures that you can take to limit the data that you're creating for companies that have not shown to take our data privacy and data protection seriously, the better.
Thank you very much for the answer. And ladies and gentlemen, Brittany Kaiser, please watch The Great Hack on Netflix. Read her book, Targeted. Brittany, it was a pleasure having a conversation with you today. I'm sure you have a very productive and busy day ahead of you, whilst we have the closing remarks to do for the event today, as we have another 3 days coming up. So thank you very much for your time today. It was a pleasure talking to you.
Absolutely. Thank you guys so much. Really appreciate it. Enjoy the rest of the conference.
Ladies and gentlemen, and we're back just to say our goodbyes because day one is now finished. It was a pleasure spending the entire day with you. I hope that you have caught a number of interesting presentations, great panel discussions, and all the other stuff that was useful and interesting to you. I think we encourage, obviously, to join everybody tomorrow morning at 11 o'clock Lithuania time or GMT +3 for those of you who are connecting to us outside of Lithuania. So just a quick recap on the fact that recordings of the discussions, panels, and keynote presentations are going to be available tomorrow on the OnVent platform. So please make sure you connect and review the ones you missed out on because of your busy schedules. It's a Monday, as a matter of fact, which obviously is probably the busiest day of the week. So once again, thank you very, very much for spending your time with us today. I hope you enjoyed it. Please don't forget you can still remain in the networking event if you'd like to. We have no constraints on how much time you want to spend. If you don't have an early wake up tomorrow morning, only at 11 o'clock to join us on day 2 of FinTech Week Lithuania, then you still have plenty of time to spend while networking and finding friends, colleagues, and expanding your network. It was a pleasure. My name is Aurimas. I'm signing out for today, and I will see you all tomorrow. Goodbye.